All right. Welcome, welcome.
It's
Thank
going to
you
be a
all.
good show.
Thank you all. Just going to wait a couple of minutes here and we'll get started.
Yeah. Really excited for our conversation today, Elizabeth. Fun fact. Could you guess how many people signed up for today's session, Get More LPs?
Put your guesses in the chat.
Oh, wow. There's some very specific guesses in here as well. Okay. Do you have a guess, Elizabeth?
I think I know the number.
Oh, okay. All right. Let's say it on 3. Ready? 1, 2, 3. 700.
700.
Yeah, there it is. Okay. 724. Oh my gosh. All right. That was even better than I expected. Well, I think we should get this show going because we're going to have a lot of great guests today, Elizabeth, and I want to savor every minute with them.
Perfect. All right. Well, welcome everyone. You are at Get More LPs. If you think you're at a different event, we are excited to talk with you today about how you can get more investment done. And in the next few hours, we are going to, is my internet going in and out?
Maybe a little bit. So, okay. It's not my internet, at least. Why don't you take a look at that? But well, Elizabeth was about to say that it's going to be a great couple hours here together. We have designed this event just for early fund managers who are trying to raise capital in this challenging market. Elizabeth, do you want me to keep going here? I can keep talking your lines here as well. Look at her just drinking coffee and nodding with her crazy hippo background. So we're going to introduce the panel of speakers that are coming up in the next few hours in just a moment, but I get to introduce first my amazing co-founder. Her name is Elizabeth Yin. Sometimes she's known as having really terrible internet and a psychotic hippo background. But, before all this stuff, she was actually a really talented founder with an exit, actually several exits as well. And now she is the weirdly obsessed hippo super fan that you see today, who also happens to run a fund called Hustle Fund. The really funny thing about this introduction, by the way, is that me and Elizabeth had scripted out a little bit of banter back and forth. So now I'm going to read her lines. And now I would like to introduce my co-founder, Eric Bahn, who is a touchy-feely, emotional dad who loves his minivan more than most anything on this planet, and also happens to run a fund called Hustle Fund. Let's introduce the lineup today. Why, thank you, Elizabeth. Really well done with that line. So actually, the first person who's going to be speaking is me. I'm sorry. I will be talking about how to nail your pitch with LPs, and I promise we're going to try to make this really fun and constructive. Next up, though, we have an incredible brand queen herself, the legend. Her name is Sophia Amoruso. She is a legendary founder. She started a company you may have heard of called Nasty Gal, and now turned into an amazing GP at a fund called Trust Fund, and she's going to talk about VC brand building. After that, I'm going to come back on stage and have a conversation with Dave Soxy. He is the founder of Family VC and the Soxy Family Fund. He also happens to be a massive fanboy of the Milwaukee Bucks and all that stuff. We're going to troll him a little bit later, but we're going to talk about raising from family offices, which I think is going to be the bread and butter for a lot of you out here listening today. And then we're going to wrap things up with our old dear friend, Mac Conwell. He's the founder of Rare Breed Ventures and possibly the hardest working hustler in venture capital, to talk about raising capital in public, specifically on Twitter. So I hope you're excited about this lineup today, because as you can see that this is a panel of speakers that represent some of the best emerging managers in our industry right now. And the good news for you too is that there's going to be plenty of time for a Q&A for each of these sessions. So if you have a question, one of the things that I'd love to request is that you put those questions in the Q&A section of this Zoom webinar. Okay, try not to put it in the chat. The chat's more for about like like trolling and like talking to each other, you can make fun of us while we speak. This is my real garage. That's real garbage, real kids' toys over there. Like, who does that, right? But we'll be able to monitor the Q&A section. We'll try to get through as many questions as possible. During the Q&A, you're going to see another queen. Her name is Cara DeMar. She's our head of marketing and events at Hustle Fund. And she's going to come and help to moderate some of those questions. Someone asked if there's going to be a recording. Yes, there will be a recording. All right, again, I'm reading some of Elizabeth's lines, so I get to read it now. Let's get going. First up, minivan guy, Eric Bahn. I sure hope that comes off well a little bit later in the recordings. Okay, so we actually have a really awesome topic to kick things off, which is around this notion of nailing your pitch. So I want to set a little bit of context here. So again, I'm one of the co-founders at Hustle Fund, but specifically, I'm the partner that leads fundraising for Hustle Fund. It is a team effort, but I like to take charge in this activity because it is, believe it or not, my favorite activity in the world. To date, we've raised well over $100 million at Hustle Fund since we launched in 2017. And moreover, we've helped hundreds of portfolio companies with their fundraising strategies as well. So, this is, I think, an activity that I really love to teach. And we have a really cool format for how this is going to go. So I'm actually going to pitch you Hustle Fund. Like, I'll give you like a version of the pitch that's a little bit more condensed, but we're going to actually go through that. We're going to do a dissection of my pitch. And then we're going to sort of talk about differentiation. We're going to talk about the different types of LPs and how we should permutate the pitch towards those LPs. I'm going to try to do this all within about 30 minutes. And, we'll leave 15 minutes for open Q&A. So again, put your questions in that Q&A section of the Zoom webinar throughout, and then Kara's going to come back in, and we're going to try to get through as many as possible. Now, one thing that we're going to try to do today is we are not going to use any slides for this presentation. You're not going to see anything from that. And the reason why is I never pitch with slides. Slides for me are actually a reference that I will send to prospective LPs a little bit later. But when I pitch, I like to do it this way, and specifically on Zoom for first meetings. It's going to be set up just like this. Garage is exposed. I'm looking right at the lens. The lens is actually 1 inch higher than my eye line, so my chin doesn't look like this. I kind of got that, nice tight kind of chin action going on right there. And I'm talking to you just like this. So let's get into character. Let's begin by actually starting with the Hustle Fund pitch itself. Now, this is how we're going to set it up. I want you to pretend that you are an LP that is representing a family office. Let's say that it's like a $500 million or more family office. So you're the decision maker. Yeah, I think that's enough details for now. So get into that character and let me try to pitch you Hustle Fund right now. All right, so here's scene. All right, well, great to meet you. I am super excited to spend some time with you to share introductions. And, I want to sort of talk about what we do at Hustle Fund, as well as give you a sense of my background as well, because it's actually really relevant to the mission that we are trying to pursue at Hustle Fund. So I'll start with a little bit of the personal background. So I want to start with 2 fun facts. The first is that my dad is actually from North Korea. That's fun fact number 1. And fun fact number 2 is that he has successfully escaped from North Korea. And, there's this saying that I heard from church once, which is that small hinges swing wide doors. And I actually really like to view humanity and our experiences as the accumulation of these small hinges. And there was a lot of small hinge moments in that journey when he made it down south. And it was really tough. He lost some family members along the way. He survived the Korean War. He served during the Vietnam War as well. But through a bunch of kind of small, kind of random moments, he had an opportunity that was sponsored by the US government after his service to come over to the United States. At the time, he had dropped out of medical school to serve in the Vietnam War. And then he was able to resettle with his wife, my mom, over to the US. He made it over and they landed in Detroit, Michigan. And he had to redo medical school, residencies, fellowships. And just 2 years ago, he retired after 50 years as a surgeon here in the United States. And by the time I came out in the early 80s, all the sacrifices had been made. My parents' version of allyship was really interesting in the sense that like they didn't ever talk about the trauma of their past, but instead wanted to promote an abundance mindset for me and my sister. So I grew up in a really, really nice part of Michigan on the western side of Detroit. Grew up next to a forest. I'd run around. I could sort of focus on my studies. And, as a result of, I think, just having that kind of abundance mindset, I was able to stand on my parents' shoulders and have this life that I get to enjoy today. And one of those big first steps was actually being able to attend Stanford back in 2000. That's how I made my way from Michigan to California. And as I like to joke about my first year in college, I met all the women that I'm currently growing old with in that first year. It's actually not a joke, that's a fact. On the very first day of college at Stanford in 2000 in the fall, I met my wife. She was my neighbor in my dorm room. So I had to wait for her to break up with her boyfriend after 2 years, but I swooped in. And then we've been together for over 20 years, married for 14, and we have 2 beautiful kids. So that was a pretty good first day. A little bit later that year, I was able to meet with Elizabeth, I think in a math class, I want to say, and then with Sheehan through some sort of social setting. And, we didn't realize at the time that we would all be lifelong friends, but that's what's turned out to be. And in the intervening 23 years since we all got to know each other, at different times we were co-founders, co-investors, investors in each other's companies. I'm really close to their spouses. Each of us has a son and daughter a similar age. We really are truly growing our lives together, and it's such an incredible privilege. So out of college, I was able to spend most of my time as a founder. I spent 9 years building an education media company with my wife. We sold that to the Daily Mail, which is a larger media business based out of London in 2012. Started another media company with Elizabeth that had an exit, had another children's book company after that had an exit. And in between projects, I was able to work at some really great places like Instagram, where I was a product manager for a little while as well. And we started Hustle Fund in 2017. So at Hustle Fund, we are a venture capital firm that focuses on pre-seed stage investments. And we think that, and pre-seed stage, by the way, are sort of like, think of it like synonymous with like angel rounds, like that first tranche of capital that you are typically raising as a founder. We like to back software founders, but normally the people who are on our cap tables are like, in some cases, family members or friends. A lot of cases, angel investors. Typically, we're the very first institution that likes to invest in these companies in their early raises. And we have a really simple thesis. We think that the very best leading indicator of success that you can find in teams, even at the earliest stages of company formation, is a quality that we call hustle. So for us, hustle is defined as great execution meets high velocity. And we find that teams that are really oriented towards measurements, high throughput of experimentation, just seem to have high throughput of what they can deliver week after week, month after month, year after year, tend to just grind out the best businesses over time. And the interesting thing about hustle is that we don't think we have any capability of understanding who's a true hustler or not just based off of a pitch. And I want to illustrate this a little bit with an example. So I want to take a moment to share like a story that happened to me. So many years ago, I was at Instagram leading a large team of engineers as a product manager. And one day we were trying to hire for a senior engineer. And back then there are these pieces of paper with ink on them called resumes that were literally printed and physically delivered to you. It was amazing. And, so one of these showed up on my desk from one of our recruiters. And then I look at it for 30 seconds. I'm like, all right, we got to bring this person in. So like, this is the person looked like a dream on paper. They had gone to Princeton with their undergraduate in computer science, master's degree in Carnegie Mellon in computer science, worked at Google for several years, just looked like a slam dunk. And so, we make a decision to have this person come out. They join us, come out for the interview. And then I remember actually sitting in the conference room to start the interview. This is like a few weeks later. And this person walks in, and before he could actually even sit down and speak with me, the first thought that I had in my mind was, this man is beautiful. Like physically beautiful, like tall, handsome guy with the green Patagonia vest, the Allbirds shoes. Like if you've ever seen that show like Silicon Valley on HBO, he kind of looked like like what an LA casting director would look like. It's like, in this scene, we need you like back here, like for the demo, that kind of stuff, right? It was so already you can get a sense that I was kind of positively biased because, just of how he physically looked. Phenotypically, he looked like what a founder should look like, or like what a great tech worker should look like. Anyway, we begin to interview, we speak, and then after 5 minutes, I'm like secretly praying to God, like, thank you so much for this amazing gift, right? Like, this guy seems amazingly smart, really funny, just someone you want to dig in with for hours at a time on projects, right? And so we put him in an interview loop with 6 other engineers he'd be working with closely. Everyone says this guy's crazy good. We offer him this insane compensation package. I'm not going to name it publicly right now, but it was a lot. It was a lot then, it's still a lot now. And he decides that he's going to, leave Google, join us, and it's awesome. So we begin to work together, and it takes us about 2 weeks to realize that we had made a horrible, horrible hiring mistake. It just only took us 2 weeks to work with him to realize this. And the reason why was 2 major problems. So before I get into that, the problem was actually overall was that our expectation from his pitch, which was his interview, set an expectation that was like sky high of what we thought he could do. But when you actually began to work with him, that's when the true problems began to manifest. And here are the 2 problems. The first was he was an asshole. So it turns out that he was really insecure. So when you began to challenge him on his ideas, he'd sort of just lash out. And just like, it's just like a darkness from within would just like come back out. And it was really, really unpleasant. Like, I could ask him the most inane question, like, why did you pick a chicken sandwich versus a hamburger today? And he'd be like, how dare you question my diet? And I'd be like, oh my gosh, please, like, I gotta get out of here. Not quite the deal breaker, but problem 2 was a deal breaker, which was he was super slow. So it turns out, not to insult anyone who's ever worked at Google or any big company, but like he was working on a very, very mature product at that point in his previous role. And it wasn't in this kind of growth phase. So you're doing a much more kind of nuanced, balanced approach towards what you would ship. But because I was leading this team, I had no idea what I was doing. So, we were doing lots of like parallel experimentation, tons of like code check-ins every day. It was utter chaos, but tons of fun. And we were learning really fast. And he could just never keep up. And he kept on falling further and further behind. Anticlimactic end of the story, by the way, is like we convinced him to leave our team after 6 months. I think he's still like working in that organization somewhere on other kinds of projects, being really well paid, even like 10 years later. So why do I like to share this story? And what does it have to do with Hustle Fund? What does it have to do with venture capital? Our view is that the problem with pre-seed stage investing, when you're investing this early on into a team, when there's no data, is just mostly a vision, a crappy prototype possibly, and a compelling argument about a market that you're trying to capitalize on, is the fact that there is no data. And traditionally, what feels safe for investors to invest in are things like your pedigree and also phenotype, right? Like, does this guy, and I mean guy, look like one of those like traditional tech workers? That's actually a bias that people will implicitly accept. Did this person go to Stanford or MIT or work at a FANG company? Those are also factors. And I'm not trying to say that people that possess these traits are bad founders. I'm just trying to say that we don't think it's a reliable enough indicator of success that this founder has the capability to start something from scratch and scale it in a very big way, which is an entirely strange and unique discipline. And the way that you can understand this better is hustle. That great execution means high velocity. And with the way that you understand hustle is actually by working with the teams, which informs our investment model. We first start by writing a very fast $50,000 check into a lot of teams. Last month, we saw over 1,000 deals. We pasted about 1,000 deals ingested each month. And then we invested in about 7 companies. The idea behind that is, if we're curious about the team, the ideas, want to learn about how they execute their hustle, learn more about the market, let's go ahead and write a very fast $50,000 check into a lot of teams, 84 per year, 7 per month. Next, what happens is we'll work with you on a growth project. And to do that, we set up a school on customer acquisition and sales called Redwood School. It's a 6 to 8 week program. It's a very light lift program where we will provide a little bit of training on how to think about scale and customer acquisition growth. We'll also try to pair you up with 1 to 2 mentors who are growth experts in your space, as well as a general partner like myself. And together, we're going to try to sprint for this period of time on pushing a growth metric of your choosing as a founder. It's from this period of time where we can get a much better sense of the team's hustle by actually witnessing it. We can see like, how are they closing deals? How are they hiring? How are they thinking about their experimentations and so forth? We can also learn a lot more about the nuances of the market to try to get a sense of whether this is an opportunity that's going to be chasing, I think, a large market that can produce venture capital like returns, I should say, to themselves, the founders, but also our investors and ourselves as the investor as well. So it's a lot of questions get answered there in terms of our conviction about the hustle in the market, but reciprocally, and also perhaps even more importantly, the founders have a chance to judge us, to see whether we are VCs that actually add any real value, actually unblock, actually have true empathy. Are we actually good human beings too? And what we find is that in about 20% of cases, after you write that first check and run the growth project, in 20% of cases, we find that we have very high conviction about the team's hustle. We really like the market too. And that's when we will concentrate a second and third larger check, upwards of $250,000 each time, into that company to make them what we call a core position within our fund. So that's our unique model and our approach to investing in the pre-seed stage. We think that hustle is actually that differentiator that allows us to test and understand the capabilities of the founder, as well as the potential in any given market. And in terms of how things are going, we started Hustle Fund 1 in 2017. It's an $11.5 million fund that's operating at a X IRR. I'm not going to name the numbers publicly. They're good though. And then Fund 2 we launched, which is a $33.5 million fund. We launched that in 2019. That's when we really nailed our model. It's operating at a Y IRR right now, net IRR. And then we just launched Hustle Fund 3, which is a $46 million vehicle last fall. And too early to tell. The data is flat because we're just beginning to deploy out of it. So I'll end with this sort of last comment here, which is, if you're going to work with us at Hustle Fund, or if we have a new teammate that we're trying to hire, or even a founder that we want to work with, you have to believe in actually the core mantra that drives our fund. And this is our purpose, which is that great hustlers look like anyone and come from anywhere. And it turns out, there's a lot of sort of controversy in the past several years about like how to approach like diversity, inclusion, all that stuff. But I think largely our industry is treated as like a virtue signaling thing. It's like, oh, look, I like invested in an underrepresented person. Look, well, yay, But our view is like, no, you got to sort of flip this. This is actually very aligned with capitalism. If you create as inclusive a funnel as possible, including those who come from privilege and great schools and all that, and those who don't, invite them to have a chance to engage with you, and then give them a chance to actually show what they can do with a little bit of investment, and through the merit of actually proving their hustle, you're actually going to end up with a pretty inclusive set of founders at the very end. So those that are in that core position set are naturally about 40% women, 27% underrepresented. Over 60% of our deals are outside of Silicon Valley. Every day it looks just more like the populations of the markets that we're serving, because great hustlers look like anyone and come from anywhere. Okay, I'm going to stop there. That's the end of the scene, okay? And then there's some questions and all that stuff. So I want to spend the next few minutes to actually dissect what we have heard. And to do that, let's actually talk about the storytelling, the differentiation. Yeah, let's just focus on those things. And then the last thing I want to share is actually around the types of LPs that you're going to be pitching to. All right, so let's talk about storytelling. I got to give credit actually to my friend Shahao Ko. He runs a really great family office in Singapore. He recently sent me this TikTok message. This is literally 2 days ago, because I started talking about these concepts a lot. He's like, and the speaker was actually talking about this notion of pathos, logos, and ethos. Okay. So now we're going to go into like your AP English studies from like high school now. So pathos, what is pathos? It is actually the emotional connection quality of a story, right? So, it's not just like saying like, oh, like I grew up and I had this grandmother and I loved her so much. Like a different way to sort of share that same story is like, it's Christmas morning. I wake up, I'm only 8 years old. And then the first thing I notice is like the smell of cookies. And then I run down in my PJs and I see my grandmother in the kitchen. She had surprised us with a visit. I run over there to hug her. I can feel actually the fuzziness of her sweatshirt, like rubbing against my face. It's the best feeling in the world. Like, this is just a fake example here, but like that never happened, by the way. But like, you get a sense of like the emotional quality of connecting to that kind of a story, right? It's like almost like a show, not tell kind of thing. Logos, that's logic, right? Example of logos would be like, what is actually the rationale behind like why you think this is compelling? So this is where I think a lot of pitches tend to be too oriented. It's like, we're this company and, we've been running experimentation around 5 distribution channels. We found the LTV to CAC ratio is this. This is going to be repeatable. So that, if we take $1 million investment, we can deploy against these kinds of marketing channels. And then right now, like the evidence that we know what we're doing is like a 70% kicker right now, month over month. Like it's important data, but like, this is actually like, it's logic, and you need to have some of that, but not too much in some cases. And I'll sort of come back to that in a second. And finally is ethos. This is the notion of credibility. Like, why should you listen to me? But, let's say that I'm creating like a cure for COVID. Like a good ethos statement would be like, I spent 15 years as a senior scientist working on virology at Genentech. And like today I'm like presenting like this notion for like a COVID cure or something. All right. Pathos, logos, ethos. I actually think that every pitch needs to contain each of these 3 elements, but the weighting of each of them can vary a lot. So let's talk about pathos. Okay. In the pitch, pathos was established in the very beginning. Why would I talk about North Korea? Why would I talk about my dad? That makes no sense, right? Well, it turns out that people who listen to your pitch, these LPs, hear hundreds of pitches, maybe even thousands of pitches per year. And they all sound the same. So you need to snap them out of it to say like, oh my gosh, I don't want to pattern match this BS like pitch I'm about to hear here. No. You got to move them into the neocortex part of their brains where they have like, where they can sit back and listen and be like, wow, this is like story time. It's like campfire, s'mores. I'm going to listen to like a good story right now, right? That's the mindset I think that we're trying to establish with pathos and driving lots of pathos. And there's pathos throughout. You'll notice that I actually had like the story about like that guy who interviewed with us and like how handsome he was with that green Patagonia vest, which I'll never forget. I can't get out of my mind. I still think about him today. Right? Like that's pathos, right? You're in that story with me. Logos, right? Okay, well, we didn't cover it so deep. And actually I did a very condensed version of this pitch, but like, at least you could see the logic behind how we are trying to operationalize this notion of hustle through like the system of like small check, working with the team, growth project. Normally in a real pitch, I would share more about like what the net IRR data look like. There'd be a lot of Q&A that's very logos oriented by the family office or institution that I'm speaking with, to sort of talk about like more nuances of the model. I actually tend to push a lot of the logos conversations for the second conversation after the first pitch, after they've had a chance to look at the data room, our Monte Carlo simulations, all that kind of stuff. And then ethos. Why should you listen to me? This one kind of makes me feel a bit mixed, but you notice that I name dropped a couple things. Stanford, right? Facebook and Instagram, exits to like a well-known company. Sometimes I feel a bit mixed about this one because like we're actually a fund that truly is trying to be inclusive and not like necessarily care about those heuristics necessarily. But I will say that LPs do care. If you have some of those traits, you went to like a top tier school, you worked at a top tier company, or you have a really cool exit, or you did some sort of research that's really notable. I mean, you got to work that in because it produces that kind of credibility of like, I really, really want to pay attention to this person. I'm going to play a couple stereotypes here, which is the more institutional the LP, the more I've seen it correlated that they seem to care more about those ethos things to see whether you're like close to any circles of privilege or elite kind of circles as well. So something to keep in the back of mind, and I'd be delighted to have an active conversation about this. Okay, so I wanted to dissect that of just like the pathos, the logos, the ethos. I've given this pitch thousands of times. All right. And I find that this actually is like the formula. Like this is the exact pitch that I like to share. And oftentimes, like not every time, but like, let's call it like 15% of the cases, an LP can actually commit within the first meeting. All right, that's kind of how it works for us. And I really want you to come to that place where you find your balance of pathos, logos, and ethos. One of the things that we promised you in this nailing the pitch presentation today was this idea of differentiation, right? And I want to dissect this as part of our pitch too. I spend a good amount of time trying to work up the context behind this small check, run the growth project, big check model, because we do think that this is a very definingly weird and interesting characteristic of how we decide to deploy capital, right? Other kinds of things that I didn't even mention in the differentiation thing is like this whole community that we've developed. We actually have a pretty active media business that is serving as like a distribution channel for talking about our startups and founders and teaching startups and venture. We have a huge 1,500 person community called Angel Squad, where we actually train new angel investors on how to become really good founder allies and supporters, right? It's awesome. We also host really great events, and I'm going to name drop it right now. Go to camphustleasia.com. We are hosting an event in Bali, actually in September, that is putting together a lot of great family offices and other institutional investors together as a really cool Southeast Asia meetup. If you're an emerging manager, I highly recommend that you check that one out too, because there's going to be some really good folks in a nice intimate setting to get to know. That's Camp Hustle Asia, but that's just one example of all these great events that we put together. So these are things that we try to work in to talk about, like, oh, this is how we're different. We're not quite just like a singular VC fund. We actually have a lot of these kinds of interesting communities as well that we like to work in. All right, Redwood School, another kind of differentiator, that school on growth, etc. All right, and then also like the deal flow too. Lots of deals coming in. Kara, I know that you just popped into video. I had one more segment before we get into the open Q&A, but did you have something to say?
Yes, and I'm going to leave you time to get into that, Eric, but there's just so many questions right now about, Hustle Fund is on its fund, right? We're what, 6 years into
6 years in, almost a 6-year anniversary.
Amazing, building what we're building. So how do emerging fund managers show that they're different and kind of show off their traction and capabilities when they're doing fund one?
That's not an easy one. And unfortunately, this is mostly a question for you to sort of figure out too. So like, for us, like when we started Hustle Fund, we actually began with this fund model in mind. That's actually the inception behind it, was just like, we think that like pre-seed is like prejudging people in the wrong ways. Like, it's overly indexing towards like this really narrow group of men with a lot of privilege that seems to be getting all the seed investing. But does it make sense? Like, is there a different way? Should we be judging people differently? And then me and Elizabeth actually whiteboarded like the small check growth project, big check model as sort of our solution to try to build a slightly more meritocratic aim for this. So that for us is, I think, our big thing. But if you have like a unique perspective in the world that you think is singular to yourself, then you got to be find a way of delivering it really well. And one of the ways I really like to deliver differentiation in that kind of part of the message is pathos. Like, it's not just say like, I had this great grandmother, sometimes she'd make me cookies on Christmas. You got to paint that picture of like the warm sweater on the face and so forth, because at the end of the day, you may have heard that like everything is sales, right? Like, whether you're actually trying to like sell my Honda Odyssey to Kara, or I'm trying to convince Kara to join Hustle Fund, and she's, by the way, our first employee at Hustle Fund, our longest tenured person here. Thank you so much, Kara, for being here. That's a little bit of salesmanship, but then like you got to take that a little bit notch up. Like, it's not everything is sales. That was kind of my insight in the 20s, my 30s and 40s. It's actually everything is good storytelling. Right. So like sometimes it's a little bit easier to take the medicine if you wrap it in like a really great story that way. That's a little bit of a dance around that question, but the differentiation part is really tricky. And the thing I'll reiterate is it's very easy to fall into a presentation or a pitch that you're giving to someone, and then they fall immediately into a pattern match. It's like, oh, I heard this one before. And you can start to see it on their faces, which is why I like to do Zoom, because all I'm doing is just staring at them the whole time to see whether they look bored. And the moment that they seem to lose interest, I inject a story, I inject a joke, I inject something weird, right? To try to snap them back into the neocortex so they're actually going to listen. Otherwise, you're going to be operating from like this medulla, like lower functioning like part of the brain, whatever it is. And then they're just gonna be like, I heard this before, like I don't like it. Right. So anyway, I want to pause. I want to hover on that. Okay. I know there's a lot of great questions, Kara, but I do want to get to this last part, and then let's open it up for Q&A. We will have some time to do that. So talked about dissecting the pitch, but let's talk about the types of LPs. All right. I think that there's really 5 types of LPs that you're going to be pitching. High net worth individuals, family offices, fund of funds, institutions, and sovereign wealth. Okay. Let's get rid of sovereign wealth right now. If they're like in like fund 1 or 2, rarely do you get like, you know, Malaysia or Singapore or whatever the sovereign wealth fund is to actually invest in your fund 1. That typically doesn't happen, right? That happens when you have a much larger fund later. So let's put them away for a second. High net worth individuals and family offices are probably going to be where you go first with fund 1. Your fund is likely going to be smaller if you're focused on seed. Not always true, but high net worths, they kind of act a little bit more like angel investors. They want to sort of back you. They're very easy to work with, but their check sizes are small. As you move up the stack to family offices and then fund of funds and institutions, the check sizes get bigger, but convincing them to give you to have them invest in you is actually much harder. And also serving them over the long time is harder too. Like once you get to like an endowment or something like that, let's say the Gates Foundation decides to invest in you, you're actually going to need to have like really, really good reporting. They might have some sort of like look-through requirements or weird side letters and audits and all that stuff. It can get really tricky. But I want to like highlight high net worth family offices, which is our bread and butter, by the way. Family offices are like a little more institutional. So they have like a thesis in mind in terms of where they're trying to invest, but they often can make really fast decisions like an angel can, but the check sizes are really great. So that's kind of where we go a lot. And we're going to speak with Dave Soxie a little bit later about raising from family offices specifically, because I think they are the perfect source of capital for emerging managers, just like yourself. But let's go back to this pathos and logos thing. Let's put away ethos for a second. So logos is logic, pathos is emotion. The earlier you, with the smaller checks, like the high net worth individuals, I tend to find that you need to pitch a little bit more on the pathos end of it. They like the good storytelling parts of it. The more institutional you get, like closer to endowments and things like that, it's a lot more logos driven. They want to know that you have like a solid model and like evidence behind it that you can actually execute what you're going to say. So think of this as like a sliding gradient that goes from like left to right, right? And that I think is actually going to be a really good kind of sort of gradient to think about when it comes to the types of LPs that you want to speak to. And I think the big mistake, and this is gonna be my last statement before we open it up for your Q&A, is going after the institutions first. It's important to introduce yourself, but know that most institutions will not really be ready to invest until fund 3, 4, or 5. If you're talking about funds 1 and 2, high net worths and family offices, I think would be your bread and butter, and maybe some selective fund of funds as well. Like we've had great experiences talking to Sindana or Foundry Group. There are these institutions that are really good at supporting early managers and actually kind of act a little bit more like angels or family offices or high net worths in some ways. So I wanted to just lay that out there too. Okay, so I did a lot of speaking. I just blacked out. I can't remember what I just said. So Kara, I want to bring you back on the stage, our head of marketing and events, Kara DeMars. Any good questions coming in?
We have so many great questions. I'm going to have to cherry pick a little bit. You actually answered quite a few in your spiel. So we'll focus on the things that you haven't addressed yet. A question I would love to hear the answer to is around check size. Do you recommend that emerging fund managers drop the minimum check size for an LP to get to a wider funnel, right, to be able to allow more LPs to participate, or stick to the minimum for the fund? And what did we at Hustle Fund do when we encountered people who wanted to invest but couldn't meet the minimum?
Oh man, this is such a good question. So, and it's bringing up so much post-traumatic stress for me. So me and Elizabeth start this fund 1 and we're like, you know what, 2017, we got a great thesis. We're smart people. let's go raise $20 million, right? Reasonable number. We ended up raising $11.5 million. That was 700 pitches over 9 months to get to that $11 million. Elizabeth went to her freaking eye doctor and asked for money there, right? Like we pulled every single like college friend that we had that we thought was rich and begged them for cash, right? And that kind of works, but we took checks as small as $10,000 for that first fund, and I have no regrets. So like, I think part one is just like brute forcing your way to some sort of minimal viable fund size is totally fine. You will have constraints. I mean, in most funds, you have like a 99 LP slot limit. There's ways to do like parallel funds where you can increase that. That costs a little bit of money sometimes. Do it through AngelList or Sidecar, one of these great tools. But like there's you know, just think about like the rule of 99 generally. And there's more nuance. Talk to Laura about this. Minimums are good if you feel like like, I guess enforcing minimums are important if you think you have to have a specific fund size in mind, that you have to meet that minimum threshold in order to execute what you need to do, then yeah, you got to do it. And by the way, the really quick strategy to get someone to increase their commit is really simple. Let's say Kara says like, I can do 100 grand and my minimum is 250. The first thing that I say, and I do this every time, Kara, what would get you comfortable to $250,000? That's it. Just ask. And you know what? More than 50% of times people did increase. Maybe not the whole way, but they did increase. You just ask. And the thing that's really hilarious is people are too afraid to ask. So like, you know, just ask, and then do the Elizabeth had this legendary grandfather. He died at the age of 100, but he shared some of the best advice that I think I've ever seen in terms of like emotional negotiation. He said, like, whenever I say bad news, I do it with a big smile, right? So it's like, Kara, I really find your last statements to be super offensive to me, and I want to have a discussion about why I think that's the case, right? By the way, that's never happened to Kara. We've never had that discussion. This isn't an offensive conversation, by the way, but it's like, Kara, I'm really grateful. It means so much to me that you are signing up to be part of the Hustle Fund journey with your $100,000 commitment. I got to ask you though, is there anything that we can do to make you comfortable with $250,000? In silence, and see what she says. Okay, I'm starting to veer a little bit away from that, but like really think about what your minimum viable fund size is, what true minimum you have, and then try to be flexible, but also ask for more money from the same person.
That's great. Actually, there's a question that's related to that. So let's move into that one. After you do your pitch and you answer the LP's questions, what's your strategy to close? How do you bring your pitch full circle and determine if they're interested or not?
Yeah. Okay. Let's do this. So I just pitched Kara and she's like, this sounds pretty good. Can you send me more information? And I'm like, yes. And then within 1 minute of hanging up on the phone call, I will send her our entire data room, our full pitch, all the materials. It's my parlor trick. I always try to send it within 1 minute. And the reason why is no one ever does that. So if you find that there's momentum behind the conversation, you got to keep that baby going, right? You got to just like feed it. And then, so I immediately send within 1 minute. And then in that email too, with the follow-up information, I say like, I am going to contact you in 1 week after you've had a chance to process this information. And then 1 week later, I follow up and say, Kara, I hope you had some time to process this information. What are your thoughts? You ready to join us? Right? Usually there's a second conversation or whatever, but, or a lot of times they'll just ghost. And I will continue to follow up for the rest of your life until you tell me to say no. And this is actually where people lose in fundraising. I think that fundraising is 20% great pitching and 80% great process. And the thing I really pride ourselves on is we keep a very clean CRM that provides reminders, notes. I track email opens, everything, right? And I will keep pinging you. It's almost 6 years into Hustle Fund, Kara, and I'm still sending a monthly email to certain LPs who have not told me to go away yet. Right? Because one time I pinged someone 12 times and on the third, they ghosted every time, and the 13th time they committed to $500,000. Right? So you got to be really persistent about it, but it's like a velvet hammer. You know, you got to hit them in the head, but with a little bit of development, right? Of just like, usually by like email 10, I'm like, by the way, like if this is not a fit for any reason, bad timing, it's totally cool. Just let me know and I'll stop pinging you for now, right? And then the other thing that I do is I will add them to our monthly LP newsletter. So immediately, the first thing that you do when you launch your fundraise is you will send monthly updates. It doesn't matter that you haven't closed or committed all the money yet. You got to start doing that and then put all of your prospects and all of your committed investors in the same list so that they get monthly drip campaigns reminding them about what you're doing, the progress you're making, thought leadership kind of pieces you want to write and so forth. We have been doing this for the last 6 years. We've never missed an update. It goes out on the first day of each month at midnight. Okay, we have never missed. And I take a lot of pride of that because there have been so many investors who do not understand Hustle Fund, don't like our fund's model, but have decided to commit anyway because they feel like we do what we say that we do and execute well, right? And if you then demonstrate these things in kind of these small hinges, that can be the difference between unlocking like a lot of money and versus not. All right, I'll pause there.
Okay, thanks, Eric. I want to switch gears a little bit. So there are a lot of questions about warehousing. I know we just did a segment on warehousing and small bets, so I don't want to go into it too much. But people want to know is what's a meaningful, hopefully everyone knows what warehousing is. If not, I'm going to put a link to the article in the chat. What's a meaningful sort of percentage or of the shares that would make warehousing attractive to LPs? Does it matter?
Yeah, great question. Warehousing is still relatively uncommon, but it is, I think, a powerful tool that you have at your disposal when you do your fundraise. So let me sort of quickly define warehousing. This is notion of like making some investments or converting some investments that you've made with personal money into the fund, right? So one version of warehousing is like, okay, I'm going to raise like $10 million, but I still need to like start my fundraise process, but I want to prove that my thesis actually works. So I'm going to allocate like $250,000 of some money that I have. Let's pretend if you have that. And then I'm going to start to deploy them into companies. And then when I raise my money, I'll then sell them at cost over to the fund. I'll basically transfer the shares over. So if I put a $50,000 check into Kara, it's under my name, but when Hustle Fund 1 starts, I'll work with her to transfer the shares from Eric to Hustle Fund, and then Hustle Fund will compensate me back the $50,000 that I put in. That's like a somewhat common thing to do, and it's a great way to sort of demonstrate the skin in the game, the seriousness about it, but also to show that your thesis is actually being executed against. What we did with me and Elizabeth's money was that, and also we warehoused our very best angel investments of all time. So like deals that I did like 9 years previously that were like way into their unicorn status, I sold at cost for like the $20,000 I put in and so forth. And the reason why I did that, and Elizabeth did that, was so that we can guarantee that there are winners in Fund 1, right? This is really important. So let's pretend that you were like one of the first like Stripe investors, right? And you put in Stripe at like a seed check for like $10,000, right? I can only imagine that's worth like tens of millions of dollars right now. And but you decide to warehouse that deal as and get compensated for $10,000 into Fund 1. Like as an LP myself, I would of course drop everything I'm doing and just give it cash because there's a guaranteed winner in there, right? Like you've already returned the fund for me. So it's kind of like this kind of crazy thing to do. How much should you do? It's unclear. I don't think it means that you have to do that many. Just a couple of logos, maybe half a dozen would be pretty impressive, or don't do it at all. Most fund managers don't put in any money in for warehousing, and that's totally fine too. I think that's a really there's a reason that's reasonable too, to do zero warehousing. I think I see a lot of questions here, Kara. So if it's cool to have some flexibility, I'd like to spend a little bit more time on this with the open Q&A before we move over to Sophia. And also this buys us time for Elizabeth to sort out her internet issues too, so that they can have a really fruitful conversation. I hope that works for everyone.
Elizabeth's internet is out. It's just not working. So we're going to do a quick pivot that I'm going to interview Sophia if that works.
Okay.
Okay. So I know hotspot would be nice. Unfortunately, it's not working, but hopefully she'll be back in time for her conversation with Mac. We're going to have a conversation with Sophia, not to worry. And in fact, it sounds like she might have a cool surprise for us. we've got, I would say about 3 minutes, and then
Okay.
we've got going with Sophia. So if you see a question you want to answer, go dive in.
I want to start with actually CRMs. So I saw this one coming up a couple times. Don't overthink this one, right? Like a great CRM could actually be like a Google spreadsheet when you're tracking your LPs. The key is this though, is HubSpot, Pipedrive, like all these are Salesforce, even they're all great tools. It doesn't matter. They're all the same. Streak, whatever. But the key is this, is people actually use CRMs in the wrong way. It's not just enough to just track notes. Like, oh, Kara really likes cookies. I should mention that in our next conversation. You know, you actually need to set dates and deadlines. When I'm in fundraising mode, the first thing I do is I make a cup of coffee, okay? And then after I look at my cute child on my coffee mug, I then head over to the garage and then open my computer, and then I load my CRM, and I see usually 20 people that I need to contact. All right. And those 20 people, they were dates that I set way back, like last week. I was just like, okay, today's Monday. I got to reach out to like Kara, Elizabeth, Sheehan, all these people. And then the notes are really quick. Usually I've already preloaded like a template for like a second ping or third ping or fourth ping or fifth ping or 10th ping. I was just like, and they're simple. It's like, hey, checking in, any new thoughts? Let me know. I'll hit you up next week. And then, you know, I just keep doing that forever until like, you know, you ghost me forever or you say something. But it's that persistence that really matters. And I'm finding this is the number one thing I see with all the GPs I talk to. They just give up too early and they don't want to be rude. You got to be rude a little bit. So anyway, I'm going to stop talking there.
Eric, I think we've got time for another question. And what I want to talk about is closes. So we've discussed this, you and I, when I interview for you for Articles for Small Bets, this idea that if you're raising an $11.5 million fund, you can do closes preemptively, and doing, let's say, of your first $3 million allows you to start deploying that money before you finished raising your fund in its entirety. Can you confirm that's true?
Yeah. So we always do like 4 or 5 closes. This is one of those obnoxious things that like people created a rule or norm that makes 0 sense to me. A lot of times there's like this like flex of just like, look at me, like I did a single close of all like $100 million, you know? I mean, that's cool. Good for you, brother or sister or whatever, but like, whatever, you know, like, or like I did half of I did 50 million, then gonna do the other 50 million 2 closes. It's this weird bravado that makes no sense. I actually think that you get a little bit of money, you do a capital call, and you put that money to work, and you show your LPs how you do your work, right? So we do like 5 closes of like $10 million each or something. It's weird, but like I think showing that kind of track record, even demonstrating towards the people that come in later closes, it's a great way to show like, oh yeah, like, you know, look at like the companies in our first close are really good, right? Come join us before you run out of space and you can't come in. So don't feel too coy about that. And there's some really great tools to do multiple closes. Sidecar is a great partner to do lots of closes. AngelList does it well. Or you can work with this great company called passthrough.com. I really like them as well. We used them in our last fundraise to pull in the subdocs, execute the close. It's great. So yeah, don't be afraid, especially in fund one. Do a gazillion closes. It's all right.
Amazing. Thank you, Eric. We have like 15 questions to get to. So is it okay if people holler at you on Twitter if they have a burning question that they would like your advice on?
Yeah, sure. I'll try to get to as many as I can. I'm at Eric Bahn, EricBahn. That's me. And follow me too on Twitter. 90% of it's shit posts and minivan tweets and things like that, F1 racing tweets, but sometimes I'll say something useful. Even better is actually follow my my ghost of a co-founder, Elizabeth at DunkHippo33. She's really the queen at Twitter and shares most good stuff. Although she's not very good at internet, you know, she's just like really poor at that for some reason. But it's been such a pleasure to do this session and kick it off with y'all. Thanks so much for listening to my deranged conversation. And I'm really excited to come back a little bit later in the show to talk to one of my good buddies, Dave Soxy, about raising capital from family offices. But until then, Kara, you are the luckiest queen ever. You get to speak to the queen herself, Sophia, right? And this is going to be a great conversation because she is one of my heroes when it comes to brand.
She's amazing. She's the queen. Eric, thank you so much for being here. We're going to try and do an open Q&A a little later, you guys, so stick around. At the very end, we're going to try and get some more time, Eric, to answer some of your questions. Eric, you're the best. You're king of storytelling, and we'll see you in a little bit with Dave.
I appreciate you, Kara. We'll talk soon.
Amazing. Okay, folks, stay with us here. We are diving right into brand, and the whole point of building a brand for a VC is to attract deal flow. This is something that LPs care about a lot. And so for this session, we're bringing in just the biggest of big guns, Sophia Amoruso. You probably know her as the founder of Nasty Gal, an e-commerce business that exploded with about $100 million in revenue before it got acquired. She also started Girl Boss, an incredible podcast media company that has like 23 million downloads, one of my favorite podcasts to listen to. And then she also started Business Class. So she's just entrepreneur rolling one business after the next, consistently successful, consistently massive brand. She's New York Times bestselling author, and now, really exciting, she has started a fund, Trust Fund VC. And so she's going to be doing a lot of investing in startups, and we're really excited to bring her on today and find out how she built her brands from the ground up and how we can apply those learnings as VCs so that we can attract great deal flow and really wonderful LPs as well. So with that said, Sophia, welcome.
Hey.
Thank you for being here.
Thank you. I see the comment. I feel like Sophia invented the term girl boss, and I'm like, I don't know if that's a good or bad thing, but I did. Hey everybody, thanks for having me. Hi Kara. Elizabeth and I are on text, but so I mean that part of the Wi-Fi is working, but I know how annoying it can be. So I'm excited to talk with you. We've talked before, so this is super familiar.
We have. I'm really excited to chat with you. And while I'm devastated for you that you don't get a conversation with Elizabeth, I myself am quite pleased to be taking over this interview. And I'm really excited to just kind of nerd out with you on some brand stuff. But before we do, you had mentioned privately in our chat that you were open to sharing your for Trust Fund. Since we just are coming off of Eric's session on raising and pitching, is that something you want to quick first before we get into the meat of this other topic?
Totally. I mean, it's like, it's the introduction. If somebody doesn't know who I am, whatever, it's like the whole thing. It's the thing that I'm riding on. It's like the coattails of my past and the brands and businesses that I've built. So yeah, I'll jump into it. Why not? Here we go. Pardon all my tabs. I just switched back from Arc to Chrome because Chrome is still way faster, but I do like the Arc browser. And I found this great bookmarking tool called gettoby.com. Anyway, yep. So I named my fund Trust Fund because people are like, what's, I could think of all kinds of meaningful things to tell people the fund name came from, but it's like, it's just funny and memorable. And it's also, finally, it's a brand that like doesn't have a gendered term in it. So that's cool. It's like not Trust Girl or Gal or yeah. So it's a new era for me. Trust Fund. A lot of guys in VC need the guys, lots of guys who are LPs of mine, along with Elizabeth, which is really cool. I need to get you guys all bucket hats. So another like branding mechanism. And you guys also do a great job of that at Hustle Fund. So Trust Fund's a $5 million fund. I started angel investing in I think it was like 2012. I invested in First Dibs, but mostly over the last 3 to 4 years, I've deployed over $1 million in my own money into over 20 startups and realized, wow, I have really great access. I have really great relationships. I can make a material impact. I understand what these founders are going through. And for where I've chosen to invest, I understand the end user and have a lot of empathy for them. So Trust Fund is focused on companies that are helping other people build businesses. It's really focused on software. A lot of people would expect me to be focused on consumer, but I already spent half my life trying to build $1 billion consumer business and was not, bootstrapped it to 20 million before venture capital, but still very few of them are venture backable businesses, in my opinion. And I have kind of like a parallel expertise, not as a founder, but as a user of, and someone who built my first company without all of the amazing tools that have emerged and are emerging for entrepreneurs to build their businesses. So you mentioned who I am. I mean, I'm like pitching myself. This is fun. I haven't like talked to any LPs this week. I'm not like in it because I have over 5 committed, but I'm still open. So yeah, started a company called Nasty Gal at 22, bootstrapped it, raised 60 million from Index, built it to over 100 million in revenue. Wrote this book that spent 18 weeks on the New York Times bestselling list, the bestseller list, called Girl Boss, and then Netflix made it into a series that Charlize Theron produced, set in beautiful San Francisco. And now I teach something called Business Class, which is a lesson in branding in and of itself, which we can get to. It's a digital course for mostly bootstrap, super early stage founders. So, social proof, I did this stuff using photos. It's kind of hard to, it's like at the beginning of an investor deck, I think it's just like, what weight do you have to throw around? Who are you? There are plenty of people who get on the call with me who are like, yeah, I Googled you really quick. You can never assume that somebody knows who you are or what you do. I actually think it's rude. It's rude to assume, and it feels like maybe over explaining to introduce yourself to someone who might have even read my book. But that assumption just seems like, I don't know, kind of cocky. So I've invested in some awesome companies. I've had some awesome returns. Liquid Death, I invested at 50 post. What else? Public.com, I invested 100 posts. I'm a advisor there, and they're over like $1.5 billion in revenue. Kindbody was a lot later, but the largest check I've written, that was a $250K check, and actually exited that and Liquid Death in the last 6 months. So I've got some like DPI on the books, at least with my own investments. Great. I've invested alongside some great people, found myself super well networked because I raised in 2012. Jeremy Liu flew down to meet me. Jeff Jordan from Andreessen flew down to meet me at the Nasty office in LA in 2012. These people have been like mentors, and they're both now LPs. My LPs are like a total coup. I don't know how I pulled this off. But I've known Jason Calacanis for like 10 years. Yeah, I've got like half of the All In podcast. Rob Hayes has just been an amazing mentor to me and friend. Ev Williams is someone who's been super supportive over the years. Mark, I don't know, I met on Twitter. He blocked me for a while and then unblocked me. I don't know why he blocked me. He's blocked like 20,000 people. There's some crazy number. So yeah, just awesome founders, entrepreneurs, a lot of GPs are LPs, and some really awesome executives as well. So, Hustle Fund there are a few examples, I think, of funds that kind of raise in, that raise in public or include folks who don't typically have access to investing in venture and having access to the kind of deals that you guys do, and to also have the opportunity to learn about venture, like what it is that you're doing here today. So announced in late Jan that I was starting a fund, which is literally announcing something. It's like, oh shit, I've never done this before. I'm just going to say it out loud, and now people are expecting me to do it, which is one method for like manifestation, I guess, which is just like, I'm going to do this, and people are like, okay, we're waiting for you to do it. And then you just kind of have to live up to it. And I feel like that's been my whole career. Announced that I was accepting applications for checks between 2 and 20K from anybody who could be strategic. They have to be accredited investors, which just means they have to make over 200K a year, which is, it's a lot of money, but for the typical people that get invited to invest in funds, it's way less than their income or net worth a lot of the time. And it also amplifies the brands and companies I'm investing in through this larger network of over 100 LPs now, and gives my founders strategic support from different domain experts who have experience that I don't have. So got over 6 million in applications, over 1,000 applications, social proof, posted a reel about it. And I know you're going to talk about sourcing deals later, so I'll skip this part a little bit. You know, some of it's just through introductions, which is the least interesting and method of deal sourcing that I'm least proud of. I'm not embarrassed by it because my network is really valuable, but at the same time, I built a career sourcing vintage clothing and turning something that one person thought was a donation and another person thought was gold. Not that I'm investing in diamonds in the rough, but why pick me? It's really hard to like say this stuff out loud. Even today, great advantage, whatever, we'll talk about it. I can help people and amplify, you know, the founders. Oh, wow. Alexis Sohanian and 776 led the seed in this company called Plot, which was my first check out of the fund. And the founder says that my post and newsletter drove more leads to the waitlist than all of the investors combined, which includes Alexis, which is kind of cool. Blah, 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 social proof. My founders have nice things to say about me. I've made 3 investments, which we can talk about if you want at some point. And here's my focus. Kind of talked about it, but as a founder who started in late 2006 on eBay, there was no Stripe, Venmo, Etsy, Shopify, Squarespace, Gusto, JustWorks, Slack, Dropbox. Like there was no collaboration tools. Google Chat was the only place where you could kind of remotely collaborate with your teams. There was no Zoom. There was no video conferencing. I had phones and people transferred calls to me. And I kind of miss being off camera sometimes, but at least there's like a slight Zoom filter happening here. And so watching all these products emerge as a founder who didn't have them, I really understand the pain points that founders have, both venture-backed founders and bootstrap founders, when it comes to whether it's hiring or selling or providing insurance for employees or project management or collaboration or whatever it might be. And I also have this weird validation, again, in terms of like, why not consumer? Because Nastia was consumer fashion business. I do like rare influencer deals. It's like, again, least interesting thing that I do is like the obvious, like social platform stuff, which I know is an asset and we'll talk about. But in the last 6 months, Notion, SurveyMonkey, and SoFi, which is not technically B2B, but these, you know, financial, you know, business platforms, business, whatever, intelligence, product, you know, productivity companies have come to me and been like, hey, we want to pay you to talk to your audience about these B2B products. So there's marketing teams doing research saying your audience is interested in these kinds of products and you're an expert and can speak about them. And so that's really interesting. Blah, blah, blah. This slide is for like, it's like minimum check size. I'm kind of done with the community raise. So yeah, minimum check size 250, whatever. This is the kind of stuff you have. It's just a summary on the last slide of an investment deck. Here's your expectations. I'm not throwing, you know, I'm not doing community events. I'm a solo GP, don't have a chief of staff or anybody working on this with me. You know, here's the structure of the fund, traditional fund. And then I list all this other stuff that's like, oh shit, I've been there. Here's how I can help. This is what I've been through. This is why founders choose me. And that's like, that's the gist of it. So that's what I'm doing with Trust Fund, just for context and a little bit about who I am.
Thank you, Sophia. I doubt you had the ability to look through, share your screen, look through your slides, do all of that wonderful talking and look at the chat. But the chat is blowing up by how much people love your slides. Really refreshing and non-pretentious. And it's also just fire. I mean, one question I saw that I have the same one is, what were some of the roadblocks, if any, that you've hit? You've got the name recognition, you've got a great track record as an angel investor, which I want to talk about. You've got an insane list of LPs and advisors. Has there been any challenges?
Yeah, there's been, I mean, the challenges are mostly ones that I think a lot of early fund managers, first-time fund managers have, which is, you know, I have credibility in a lot of ways. And even as an angel investor, I have credibility. Managing a fund is a job. It's different. Someone's asking about portfolio construction. I'm not good at math, but that's something you could learn in college. That's not necessarily something that makes you a good investor or someone with access or good taste or someone who founders want to choose. But it's, you know, fund construction and understanding it and understanding warehousing and recycling. These are all very new things for me. I've had LPs, I had an LP ask me what my 100-year plan for the fund was, like my generational plan. And I'm like, it's a $5 million fund. You know, it's like, they're small checks. My LPs are friendly. It's not going to, none of my LPs are people who are doing 6 months of diligence and asking for things that I'm just not really prepared to answer. So the traditional funds of funds for fund one aren't really right for me. And I've kind of taken the path of least resistance, where it's people I know, people in network who are like, awesome, I believe in you. We met a few years back, or, oh, we played poker, love what you're doing, or whatever it might be. So I think those are the challenges. It's just the learning curve is tough. And for me, it can be a disadvantage to be able to get in the room with people. Because I think there might be a lot of people who are like, sure, I'll take a meeting and not invest in funds and be like, my wife read your book, or who knows what. So I, you know, either, you know, maybe for those people, I'm just not compelling, but also I have a hunch that there's a fair amount of people who are making and taking introductions for less qualified reasons than someone who isn't leading with this like persona that I am, and, you know, for whom their introductions are possibly and likely more qualified than mine. And it can feel like a little bit of a waste of time just grabbing coffee with people who want to, like, of course you want to build a relationship, but with a fair amount of people, there's like, it's like they don't really invest in funds. I actually created an application. It's not an application. It's like, here's my deck. You've seen my deck. You know about me. In advance of our call, can you answer a few questions? Like, are you a fund of funds? Are you a family office? Are you like an individual LP? Have you invested in funds in the past? Are you currently allocating? What size checks do you write? And that's just like, great. Then I'm equipped for the phone call, and we don't have to spend half our time on the call with me answering qualifying questions about them, and very easily can just say like, hey, you know, because you're not investing right now, I would love to meet you. I'm super heads down on the fund, and I'm closing up this fund. If you don't have any like near-term interest in the fund, can we connect later this year? And everyone's like, yeah, sure, totally get it. Your priorities are right. And it's like, that's a great time saver.
Yeah, the application is smart. There's another fund that was raising using a similar community strategy that also had an application and was also really focused on people who could contribute to the fund. So that does seem to be perhaps a trend that we're seeing. I want to dig in a little bit. I want to get to brand, but I have a couple of questions before that. And I know the chat is going off and people are really curious about your strategies. I want to know, why did you decide to raise a fund rather than just continue to invest out of your own account?
Liquidity. I dumped a lot of my personal capital is allocated into angel investments. I really, really enjoy it. I love a learning curve. I realized I was just, you know, kind of sitting on this arsenal that's just stack that I kind of described. between access, ability to make an impact, network reputation, and understanding of the end user of the products I'm investing in. I'm not an operator. I don't want to build large teams. I'm operating a fund, but I don't want to continue to really chase consumer. I've spent so much time doing it. And as a 0 to 1 founder with a fund this size, and even a fund that would be, 30 or 40 or 50 million, which is still considered a really tiny fund, crazily, I get to be in the weeds. I get to work with founders. I get to look at the decks. It's really time consuming, but I'm not delegating that stuff. I get to write the LP updates. I'll drop my LP update in the chat because my first LP update, because I shared that publicly and that was really fun to put together. So I like working with founders. I'd much rather harvest the 17 years of really hard lessons and great experiences for other founders than continue to try to apply them to my own businesses.
Okay, fair enough. It does seem that the investments you made as an angel are quite different from your investment focus with trust fund, right? Many of those brands are fantastic brands and you were very lucky to get allocation in. And I'm sure they're grateful to have your support and mentorship. But trust fund is focusing on, as you mentioned, B2B solutions predominantly for consumer-facing companies. So, and I understand why certain things are backable, certain things are not. How has it been to move into this different realm of businesses? And as a sort of secondary question, the brands that you've built as a 0 to 1 founder have been predominantly consumer focused. So has it been challenging to get allocation into companies that perhaps you don't have as much operational experience with?
No, because the founders are like, okay, you can really help me. And also I think what I mentioned about having a community who read a book about entrepreneurship, who follow me because of this like entrepreneur story, who, when I was selling $80 dresses to them, they were in their 20s and now they're buying houses and they're trying to figure out, they're freelancing, they're side hustling, they want to leave their jobs. I mean, there's just a whole rise in the workforce where in many ways everybody's an entrepreneur. And as the consumer of those early products, it was eBay and PayPal. I consider those consumer products because I wasn't putting out an RFP to figure out which payment processor I needed. And the person with a Shopify account, like the free version of the Shopify account, or somebody signing up for even Intercom, a lot of these founders don't know what SaaS is. They're choosing between Squarespace and Shopify or Notion and Evernote, largely because of the brand and the word of mouth. And like, I have a Notion like pin and a Notion like tote bag, and it's cool. Like, I want to wear Notion's brand. Like, it's like a note-taking, whatever, I don't know what you call it, but it's like, that's a really hard thing to do. So with the companies I'm investing in, whether it's, one I haven't announced yet, that's a bookkeeping platform for SMBs, similar but different to Bench. Like, that's a product that they want to get in front of an Instagram audience that they're going to run Facebook, and Instagram ads to, and people are going to click on those ads, not just because of the value props. They're going to click on them because they're funny and punny and interesting and beautifully designed, and they're leading with brand, and they're doing a better job than Bench's, beige website and illustrations or whatever. I've never used them. And they're going to choose that product, based on the value propositions. But the way in is still consumer. And the aspiration of the woman who was buying a motorcycle jacket at Nasty Gal for the first time, or putting on red lipstick for the first time, saying this thing is going to transform me just into someone that's a little bit more confident. about my future by wearing this or putting this on my face is the same to me as marketing to someone who's choosing, you know, Shopify to say, wow, this software is going to change my life, or this productivity tool is going to change my life, or holy shit, I don't have to talk to an insurance broker to get my team insurance. I just have to follow the prompts to like onboard onto Gusto and send them links. That's insane. Like that really sucked when I had to do it manually. So yeah, so to me, everything that exists at the application layer that's not infrastructure or dev tools or things that I don't really understand are consumer products.
That's interesting. Eric said earlier that everything used to be sales. Now to him, everything is storytelling, and it's another way of thinking about everything is brand. So let's dive into brand now. I followed along with Nasty Gal in the very, very early days, and then saw what you did with business class, and the branding on Nasty Gal versus the branding for business class are remarkably different. How did you think about creating those brands as ways to attract the audience that you were going after?
I would say business class was a lot more planful and considered. Nasty Gal was like, what do I name my eBay store? And that was grandfathered in for another, 10 years, and it worked. It was something where people are like, what's that? Parents would see it on the credit card statement and be like, what are you buying? It was memorable, and it was fun, and it had personality, and it was voicey, and everything I do is like, fun, and there's a sense of levity in it. With business class, as a founder, I didn't have access to any kind of business education. I didn't go to college. I took some photo classes at San Francisco City College of San Francisco and audited a film class at Diablo Valley College in Marin. But none of this stuff existed. And what I've seen out there for business owners always just feels so dry. And that person who's a business owner of one, or bootstrapping, or has been an art director in-house at a company and wants to start their own creative agency. What was I saying?
Well, we were talking about the branding for business school. You didn't want education.
Yeah, like they're intimidated by, taking an executive education course. I'm intimidated taking an executive education course. And so to have a brand that is an enzyme to what is next, that brings people and makes them feel comfortable, and then shares with them what's possible for them, is really powerful. Meeting people where they are. So business class, it's like a very descriptive term. So in conversation, I say to people like, I also have this, it's pre-recorded. It's not something I teach live. It's not full-time for me. When I say I teach this thing called business class, I have an online course called business class, it's kind of like, cool. And then I'm like, but it's Pan Am themed, and I'm dressed like a flight attendant teaching everything. And all of the modules are called flights, and the lessons are called legs. And there's 3 break weeks called layovers in between. So it's just like endless fun and puns and zingers. And, we're talking about like warm peanuts when you get on the plane, and, talking to your ideal customer, learning how to pitch yourself in business class to some guy next to you. And what is that statement? But we go through the process of like, what would you say to Mike next to you in business class? So to me, like the double entendre is just like, it's all just entertain. Half of it is just to entertain myself, I think. And it's also like a throwback to my vintage, origins, and just like so fun and colorful and referential.
So it is pretty brilliant. The double in a non-creepy way, I don't really know what the term is for that, are really on point. How then are you thinking about brand for trust fund, or are you? I mean, certainly like aesthetically, there's a consistency to the sign, the bucket hat, the slides, that, let's see it.
I'm listening.
Cute. Is it pink?
It's lavender.
I get so how did you come branding for trust fund, and then how are you leveraging it to drive deal flow, to attract LPs, to just leverage the fund in general?
Yeah, excuse me. I mean, I think again, the name is it's really memorable. It's funny. I think some people are like, oh, some people have called it trust because they have so little sense of humor that they think it's called trust, like as if it was called trust capital. And they're like, so what are you doing with trust? And I'm like, oh my gosh, we're probably not right for each other. It's like, it's cool to finally go to conferences and have like dudes be like, dude, like I thought my fund had a cool name, but like, you nailed it. So it's, I think I was just talking to a friend. I think it was like on text with Abe Burns, who ran sound for A grade, whatever, for Ashton and Guy for a long time, just like batting stuff around. Like if I ever start a, course about finance, I'm going to call it nothing but net. Like I just do this, like, it's really fun. So there's that, which doesn't really help anybody. I do go through an exercise in business class on naming. And I think it's just like choosing kind of asymmetrical references. So, okay, fund. What can I throw in front of that or behind it? What rhymes is, I'll go to rhymedictionary.com and type in a word and be like, okay, fund, could it be, I don't know what rhymes with fund, like, rapid capital, no. Like you just go through like, no, until you're like, this. And then you're like, okay, where can I riff on that? It's always just kind of like a meandering path to naming something. And the brand, it's like the logo, I don't even know what I didn't hire an agency or do anything. The website, actually, this guy, Josh Franco, let me type his Amoruso.com. I don't really promote people. But this kid, he's got to be in his 20s. He built a website in Webflow. I have this ugly Squarespace site that I had made myself because I do things like that. And he was just like, I love what you've done for entrepreneurs. DM me on Instagram, sent a link to like a Webflow preview site, and it was like done. And it was the trust fund website that's there now. I changed like a tiny bit of copy, had a couple pictures, and he was like, let me know if you want me to transfer this to you. Just like, I really enjoyed making it. So that's how that happened. And I've never been more hands off on a website design ever. So there's something nice about just being handed something. But as far as branding goes, like, like I said about Notion, and I don't know if anyone else agrees with this, like you want a brand that people want to wear. Glossier sells sweatshirts. Like people are stoked to wear the sweatshirt of like a beauty brand. Like I'm not wearing L'Oreal sweatshirts, and it's also just, I'm very opportunistic. So during LA Tech Week, I was like, I'm in tech because I know a lot of folks in tech or who invest in tech. But all right, it's LA, I know this different generation of people. I know people from, Graycroft and Upfront and Index who've been there forever. But there's this whole new crop of founders and early stage fund managers, early emerging fund managers, like seed investors that I didn't know because I raised my first round out of a growth fund, and it went from here to like this different kind of stratosphere in terms of my network, but that's a really important network. And I've never really celebrated the people that supported me, even as a founder in Los Angeles. I've never felt like I'm part of the ecosystem. And also the ecosystem used to be just kind of like, it just wasn't that cool, and it's gotten a lot cooler. So during LA Tech Week was like, I just need to make noise. I want people to talk about this. I want people to think of the fund. It's like, how can people triangulate, your influence, or, okay, I saw this here and that's there. And oh, I heard that she threw a party. That's a real thing. Like, she's not just doing some thing that makes her look cool, or everybody has a fund, some glamour thing. Like, she's really building a fund, whatever. So I had a launch party, but what's a launch? Like, the fund's not closed. Like, I didn't just announce that I was raising a fund. It was like, cool, it's LA Tech Week, I'm gonna have a launch party. You just like make things up and you're like, great, we're gonna do this, we're gonna bring people together. You call it a launch party, it sounds like a much bigger deal. Hire a photographer, distribute those images, put them in your LP update, take screenshots of people sharing it, more social proof. LPs love that. They know people are talking about the fund. And it's like, it all works both publicly and privately with your existing LPs and potential LPs, to show them that there's like some groundswell around what you're doing. And it's really valuable stuff.
It's a smart move. Definitely agree. Social proof is critical across all elements of a business. You are coming into it with quite a bit of social capital. So let's do a thought experiment. Let's pretend you have the network and social following that you've amassed. Let's say you're just starting as a fund manager, you've got a good track record as an angel investor, but let's face it, so do a lot of emerging fund managers and they still have trouble raising. So let's pretend that you're just getting started. You've got a cool name, you've got a good track record as an angel investor, but you don't have all of the, you don't have the network that you have today.
Yeah.
What's your first move to build a brand where people might not come to the lunch party, right? How would you think about it?
Yeah, I would present myself like a really established firm. I would build a website before I talk to anybody. I wouldn't like bootstrap it. I'd be a lot more buttoned up than I've been. Because I am, but also like I would go to every event, I would go to every conference. I would meet everybody. I would join different, there's the Revere community, there's different, the Bridge network, there's different communities for emerging fund managers where you can meet LPs. I would make a killer deck. And, it's like anything you have, whether you've been on a podcast or there's something you can share, that one initial kind of guesting on a podcast is something you can use to leverage another one of those and another one of those. Publishing thought leadership content, right? If you're a domain expert and you can share what it is that you've learned either about managing a fund that your LPs can see, or potential LPs are able to share, okay, I'm an expert in AI, I've been working in AI for this long. I know the difference between something that's built on ChatGPT and has no moat and something that has a technology that's actually defensible. I'm going to talk about it. That's really valuable. Everybody has advantages. Everybody has experience. So figuring out how you can exploit and storytell what it is that you have is incredibly important. And it's really important to do it as concisely as possible. So I would show up looking like I would show up looking like I have almost like a team behind me. I wouldn't pretend I did, but a nasty gal, when I shipped a package out from my $500 a month pool house with no kitchen in it in Pleasant Hill, California, it was thank you for your order. It's on its way. We're so excited that you've joined us. It's just like, the royal we can go real far.
I agree with that, no doubt. And then let's talk about voice. You had a very irreverent voice with Nasty Gal, which worked really well with that brand. With Business Class, it's a bit cheeky, which I love. Both resonate, and I can see how both resonate with the same people, but perhaps years later. How do you think about voice as it pertains to trust fund, and how would you recommend that emerging fund managers think about their own voice and kind of define that for themselves?
I mean, I think it's different for everybody. You know, there's the public voice on your site, and everybody has some kind of a brand. Some people just have such experience that speaks for itself. Like, they don't need to have a cute website. Like, you know, day one, even if it's not their, like, they can have a website and it should share what it is that they're, you know, experts in. But yeah, in terms of the voice, I guess it's like, it's just my voice. Like, people want to hear from you. If you force things, it feels like it. And people want context. Like, why did you invest in that? How did you meet that founder? What's an interesting thing that you said that founder said that like hooked you? What are some parallel things that you've seen or read that are, you know, interesting to you? You know, looking at people who are gathering, you know, gaining Twitter followings, I think is probably a good idea, because there's just so many observations that you can share. Your voice doesn't have to live on your website. And it's, you know, that doesn't have to be like the ultimate representation of it. I think Twitter's or X is a really powerful tool in watching people who are publishing, you know, interesting, observant, sometimes irreverent, or yeah, like things that make you think, like almost engineer thinking can be great, because you're not necessarily, you're sharing your thoughts, but you're kind of almost suggesting that other people fill in the blanks. So I guess that's the word for that, would be provocative, without being, you don't need to be like, you know, divisive, or I don't know what the word is. And I don't know if this is helpful. Like, I think it's like finding your strengths and leading with your strengths, and trying not to be too dry about it. But like, there's plenty of LPs who are not investing in you because you're brand. Like, that's one of my strengths, right? That's what I can help founders with. That's something I lead with. That's what we're talking about today. And I don't want to say that brand isn't important, but if you have other weight to throw around as an expert, or even with your network, there are people who don't have websites and they get on they get on so many cap tables. So, and their investors aren't expecting them to write like sizzly investor updates. And actually they might be like, who are you? And why are you spending your time on this? So it's like, I guess my answer is to play to your strengths, but just exploit everything you have to storytell wherever you can. That's like it.
I love it. We have just a couple minutes left, and I know we've had a lot of questions. People have been very excited about what you're building here. One question actually is not about brand, but about your fundraising strategy. You'd mentioned when you went through your deck that you have over 100 investors. Did we get that right?
Mm-hmm.
So isn't there a limit on how many investors a fund have, and how'd you get around that?
So when you raise in public, it's through something called a 506c, and there's basically, if you can have over 100 investors if your fund is under $10 million. Once it's over $10 million, you can have, I think it's like 99 or less.
That's really counterintuitive.
Yeah, LPs.
And Ali Jamal, thank you. Yeah, and we are going to get into fundraising in public very soon with Mac Conwell. So for that, but Sophia, while we have you, I think just one more great question would be around personal brand versus sort of company brand. You've talked a little bit about this and being true to yourself and staying authentic and leaning into that really hard. As you build Trust Fund and you continue to, talk to your community on your personal social media accounts and perhaps build other things, who knows? How much do you feel that that Trust Fund's voice and brand should be reflected on your own personal as your own personal brand?
Oh, it's a good question. I think I would like Trust Fund to speak for itself, because I'm not an angel investor. It's the Sophia show because that's what I have to work with, but the fund has to be the thing that performs. It's not going to be because I can write great copy or even get like interesting logos on, in the deck. Like, those companies have to perform. So like, while my name or brand or whatever are an advantage, at the end of the day, the only thing that matters is that you do a good job. Nobody cares about the rest. And so I want Trust Fund to be the thing that people say, hey, you should talk to Trust Fund. You should talk to Sophia Trust Fund. And I want a founder to visit the website and look at the portfolio and say, oh shit, like, this fund, like, this is a place where a founder wants their logo, like, alongside those other brands. Not, oh, I want Sophia's name in like my press release. Like, that happens like once, that's not, I'm not A-Rod or whatever,
Thank goodness. He lost J-Lo, so what are you gonna do? Sophia, this has been amazing. Thank you so much for giving us your time this morning and sharing your wisdom and your stories with us. If people want to get you, is there a way that they can do that? Are you mostly on, Twitter?
I'm everywhere. My Twitter DMs are open. We have team at trustfund.vc. For checks, larger checks, there's an application for LPs on the website if you're interested, and we're still open. Yeah, I'm on Instagram. My name, if you spell it correctly, you'll find me.
I guess it's always a hurdle, I'm sure. Well, thank you again so much, and for being open to receiving questions and applications. Good luck with Trust Fund, and yeah, we're rooting for you. Really.
Thanks for having me. Bye,
Awesome.
everybody.
Take care. Okay, you guys, I know you have been here for a couple of hours already, but we have 2 more amazing presentations coming up. A lot of you have had questions about family offices. We've got Eric here to talk about that, along with Dave Soxie, who we are so happy to have. So I'm going to get off camera. Make sure to stick around after, because then we're going to interview Mac Conwell about fundraising in public and how you can get around some of the SEC's strict regulations. And for now, welcome, Dave. Thank you for coming back, Eric, and you guys have a great session.
Awesome. Kara, thank you so much. Huge thank you to Sophia. That was a lot of fun. And I could just listen to you speak all day long. So really appreciate your taking time out here. Dave, it's good to see you, man. But before we jump in, I'd like to actually share a quote from the great Smokey Robinson. And one of my favorite songs of all time is a song called Tracks of My Tears. And I quote within the song, "Baby, take a good look at my face. Oh, you'll see my smile looks out of place. Yeah, just look closer and it's easy to trace the tracks of my tears." And then it's a great song. You should listen to it. Why am I saying this?
That's
Well,
a good question. That's a good question.
I think this describes Dave right now as well as myself. So first of all, I just got to give huge props to Dave. He's got a great smile. We're going to have a great session today, but he is like personally ill. I don't want to blow up your spot. And he's actually powering through just to be here today. I'm not nearly suffering as badly as he is, but I did wake up at 3:30 this morning. It's been a week of horrible insomnia. So I'm also white knuckling through, maybe at 10% of what Dave is. But you know what, man? I think this is going to be that small hinge that swings a wide door. We're going to have a great session, come out of this energized, recuperating.
Good.
Let's do this. So I'm so excited to be chatting with my friend Dave again. And I'm going to have him largely introduce himself. I usually like to troll him with an intro, but because he's got, a little tummy ache and all this, I'm not going to do that to him today, right? But so let me explain what the format of this session is going to be. We're going to talk about this topic of raising money from family offices with my buddy here, Dave Soxy. Follow him on Twitter, by the way, DSOX. So we have 30 minutes of prepared questions that I put together, and then we're going to have 15 minutes of open Q&A. For that 15 minutes open Q&A, again, put those questions in the Q&A section of the Zoom webinar. Kara's going to come back and help us to moderate some of those questions. It's going to be great. So, and again, this is a session that is for emerging managers. And, we recently had Dave at a previous event that was oriented towards like more family offices. You might have caught wind of him, but we're going to really try to redirect the questions from that session, which was a week or two ago, to something that's more for emerging managers as well. So we'll talk about, understanding what family offices are, how we're going to find them, how to pitch to them, and actually how family offices can serve to be great partners to GPs. Real quick bullet points on Dave. I know I said I wasn't going to introduce you, but I'll just share like some quick highlights, which I really like, which he's based in the Midwest. He is a former software founder, so he really understands, I think, the empathy of the space. He manages Soxy Family Fund. He manages Family VC. We're going to talk about what those are. And I just like the fact that he's a Milwaukee Bucks fan and an insanely good short game golfer. If you've seen his videos, like he's got to teach me how to chip better. So, all right, let's just jump right into this. Dave, I gave just the high level bullets, but we'd love to hear the meat of this. Can you share a little bit more about yourself and maybe what you do with those two activities with Soxy Family Fund and Family VC?
Yeah. So hi, everybody. I'm Dave Soxy. I'm based in Wisconsin. I'm married. I have 2 kids that are in a lot of activities, and they're like petri dishes because that's why we got the stomach bug running through our household recently. But we're doing good and hanging in there. Ultimately, I'll tell you about my family office first, and then I'll tell you about the small carve out of Family VC and Soxy Family Fund. So I'm Gen 2 at our family office. I have one older brother. Gen 1 made their wealth in manufacturing in 2012, and our family office invests across the asset classes. So we invest in all of them, and then we have 3 operating companies that we still wholly owned. 2 of them are manufacturing. One's in the metal industry or metal stamping industry. One's in the vinegar industry. And then we have a meat processing plant with a retail storefront. So across those 3 entities, we have about 200 to 230 employees. But that is the holistic of what the Soxy family office is. But then carving out what I do, I lead our alternative investing, and I do that at Soxy Family Fund and Family VC. So Soxy Family Fund pooled our own family capital together. We don't take outside capital, and we do pre-seed to Series A venture fund with 90% of the first checks going in pre-seed or seed stage. So through that, we've made roughly in total, I guess with my angel investments, about 40 direct investments and then 18 into funds. So unique 58 deals to date in the last 7 years, 5 years doing it full time. But then Family VC, the reason we built Family VC is I quickly learned capital is a commodity. I'm a random family office based in Wisconsin that nobody knows about. So how can I get on cap tables, or why would a founder want to fight for me on a cap table, or why would a VC like Eric want to send me a strong deal? I know capital is not the answer, and I know other people's capital is a weak answer. So I created a community of value that I call Family VC, and that's a network of now over 160 investment entities that are broken down by 105 family offices and 55 high net worth individuals that have the means to start a family office but haven't. And in addition to what that group is all about is sharing all things VC, deals, data, events, all sorts of stuff. And in turn, that has led to strategic introductions to customers, distributors, and other partners that have only benefited our portfolio, as well as those venture funds portfolios that we work with. So that's a little bit about Soxy Family Fund, and then family our entire campus.
Really awesome. And I encourage folks, by the way, to check out familyvc.com. Also check out soxyfamilyfund.com. Really great information there. You know, one of the things that I love so much about Dave is that he leans so much into transparency and education about this world, which actually kind of leads me to the first question, Dave, to you. So like family offices are an amazing LP base for emerging managers. They're actually like the lifeblood actually of Hustle Fund for the past 3 funds, but they're so difficult to find. Why do family offices hide from the public so much?
Yeah, I mean, point blank, there's a lot of once people find out you have wealth, there's a lot of unwarranted solicitation and fake people that are reaching out, just trying to essentially be a part of resources that you have. But you know, something that I didn't realize getting into the family office world 6 years ago is there's an entire industry out there that essentially monetize the actions as well as presence of family offices.
Yeah.
And that can be very challenging because half the time family offices don't fully understand how that all works before they're getting solicited. And then that creates an awful ratio of noise to signal. And most times it's not worth it unless to actually review this stuff unless they actually have somebody working on it full time.
Yeah.
So part of it is they're constantly hiding, because when they have conversations with somebody that they think is in that realm, it's what's he asking, how much? What's he asking, how much? That's all they're thinking in the back of their head. And it's often why, you know, there aren't a lot of great conferences out there to connect VCs with family offices to date, because of previous established groups in the family office world and how they traditionally have operated.
Well, obviously, you're not talking about Camp Hustle, where I saw you. We got to hang out this spring. That was a good event. And I'm going to plug again, camphustleasia.com, people. Come join us in Bali. It's going to be a great party out there. All right. So I want to talk about you specifically. Dave, you put yourself out there. How bad is your inbox? And how are you sorting through all the noise right now?
Not well, frankly. And I think some of it is not unique to me. I think some of it's the macro environment. So a lot of those family offices that are active in venture and put themselves out there, I'm sure they're experiencing a lot of the same. But you know, I'm working on that. But I'll tell you, it's been pretty challenging because I'm not doing my typical response time of 2 to 3, 5 days. It's not even weeks, it's more like months, and it's really, really brutal right now because of what I've intentionally done this year is also traveled a bunch to try to build community with family VC. But in turn, when you travel, it's hard to it creates more inbound, and it's harder to actually do the work. But I am working on various things. So right now I am getting more organized. I do have applications on both Soxy Family Fund and Family VC, where those are getting pumped into a table that are going to be reviewed more on a weekly basis instead of a monthly or every other monthly basis, which is a cadence right now, unfortunately, just due to bandwidth. And then there's another project that I'm working on, because this problem is not unique, again, to me. And I truly believe that, there's an opportunity to break down some silos, both in the family office world as well as the venture world, and kind of combine those and better surface both fund opportunities as well as direct opportunities that are on thesis to family offices without them having to necessarily go hunt them down or, break through all the gatekeepers, which there are a lot for family offices.
Totally, man. I want to touch on one thing here and just sort of reiterate this point for those who might be listening. So Dave, I think very cleverly, has set up a form as maybe one of the first touch points for how you should engage with his family. We do this actually at Hustle Fund too with our founders. Again, if you saw the earlier presentation, we process about 1,000 deals per month. My inbox I receive about 300 to 400 emails a day. And I think it's actually even worse for Elizabeth. So, jumping the queue to get into the inbox directly, it sounds great in practice, but it's after a while, like the email triage actually gets so crazy when you're in the hole with like 10,000 messages that it's not easy for a very high demand person like Dave to break through that noise really easily, really effectively. I mean, we got to give a little bit of sympathy. So when you see things like slowness at times, like please take like a human empathetic view of this. Of just like, he may be busy, I might be busy if I'm a little bit slow. Sometimes it does require a little bit of follow-up, but if there's like an explicit process in place that we're suggesting and begging you to go through, respecting that I think is also really great. And Dave is someone that takes really seriously these processes, and we'll get back to you on this kind of thing in my experiences as well. So
Eric, just to comment on that too, most family offices that are allocating to alternatives like venture, they're putting anywhere from 2 to 10%. Sure, some do more, some do less. But you also have to understand too that a lot of these family offices, they don't have somebody doing it full time. That's one role of somebody's, and it's probably less than 10% of their time even. So finding those people that are either working for full time or truly understand with the family office, like the true bandwidth and what's going on and when they can actually review and take a good look at it is pretty critical to understand. So understanding that I think is worth noting too, because it can be frustrating. And I feel it as a founder and a VC investor as well, reaching out to family offices myself. And I'm very used to having family offices show up late by 10, 15 minutes, rescheduling on me last minute because of urgent meetings for the operating companies or other investments that they have. So there often are much higher priorities than the alternative investing in the family office. So just note that when you're reaching out.
Super appreciate that clarification or the expounding point. I want to ask this. Do y'all talk? Like, do family office managers chat with each other, share notes? Like, what does collaborating and idea sharing look like in the family office side? And I know you have a unique platform that you're trying to build for this, but like, even before you built this, like, how did information get shared? Because it seems like they're all buddies with each other, at least in certain regions.
Well, I think they can relate to some stuff on the how much is the ask and when's the ask type mentality, and just other taboo things that aren't typically talked about but are very common problems in the family office world. So there is more note sharing happening, and I think younger gens are a little bit more inclined to do that, especially if they weren't the generation that made the wealth in their family, because there's some families that, hey, they're doing it their way, they got all the answers, and that's okay as well. But there's also younger generations of those same family offices that are trying to expand their horizons. And yeah, I think it's a huge trend over the last couple of years where more and more family offices want to share notes, want to collaborate. I mean, I get asked on, hey, what are the emerging fund managers you're looking at in these categories or these geos? Hey, have you seen any deals in this stage or this type of category? And yeah, there's a lot more activity among sharing. I mean, I do that right now in pretty rudimentary tools for community, which is a newsletter and WhatsApp. But this trend isn't unique to us. Like, the market timing is pretty phenomenal as well, because you're having this massive wealth transfer from just the baby boomers on down to the younger generations are taking more control, and you'll start to see that more and more. And I think there's only going to be more collaboration across the asset classes, but especially in venture, with how venture has traditionally operated.
I like this because it's a good lead into a different question I want to dive into. So it's a nuance, but I have an opinion on this too, which is there a difference in how a GP should think about pitching a family office that made their wealth in a single generation, the same generation, versus like a multi-generational family office?
Yeah, I mean, the old adage is you meet one family office, you meet one. Tough. It's tough to gauge that until you understand like who are the leaders in certain in parts of the family office. So what do I mean by that? At our family office, so there's 2 gens at our family office. Now, granted, there's only 3 family members: my father, my brother, and I. But we have certain categories that we lead and certain categories that we assist on. I'm not shy to say I don't make real estate and minority private equity decisions, but I take it to the team and we take a look. But as far as like probing on that, some of it is understanding why are they investing. Some of it is sure. Well, you always have to assume it's returns. So a lot of family offices, they're like they have foundations and do philanthropic work elsewhere. So unless it's like very forthcoming that there's a philanthropic lens, you have to understand returns is just table stakes. But why else are they doing it? Well, some of the reason is diversification of their assets. Have they been stockpiling in certain areas that they've made their wealth in? So they want to diversify more, especially for future generations, because there's some brutal statistics out there that 70% of Gen 2 loses the family wealth and 90% of Gen 3 loses the wealth. So a lot of it's diversification, but otherwise that I've seen are very popular is, hey, we have, just like our family, we have 3 operating companies. The smart, savvy family offices know that their operating companies aren't going to do innovation that's only inside their walls anymore. So they want to keep a pulse on what's happening in the innovative community here in venture. So looking at different technologies that can support their operating companies or help them strategically there is another why to people do investing. But then even, next gen, I mean, for me, I didn't want to work in manufacturing. I'm happy to work at the meat market and whatnot there, but I wanted to carve my own path. So some of it is next gen purpose and finding purpose. I mean, I've seen different family offices invest in esports and stuff because the next gen was excited about it, even though they knew nothing about it. But just going back to the question, why are they investing, and really probing on that and better understanding that, and then finding out who is actually making the decisions. And you do that for a variety of different questions with when's the latest deal you did, what's your focus, what's your approach, all sorts of stuff there.
I dig this. I'm gonna answer my own question. Like, what's the difference between pitching a single generation versus like a multi-generational wealth family office? I think one of the things I've noticed is speed of decision making. So let's say that like I'm thinking of a person in mind that I've met. The guy grew up very middle class and then was very smart, and then he grew like a $1 billion real estate portfolio that he recently liquidated. But it's him, right? So when you pitch this guy, he's a decision maker. He did all his own, and he kind of acts a little bit more like an angel investor. He's just like, look, it's just me. I got no other stakeholders. Let's do this. Like, I know what it's like to hustle, right? When I get to the more multi-generational, and I'm going to name some folks, or at least types of folks, like the Europeans, which is just like, oh yes, our family has like had this wealth for like hundreds of years or something like that. And there are those folks I've spoken to. They're nice, but they're hundreds of years means like more babies, right? Like, so there could be like a committee of like cousins or something that's happening here. And it just feels like it's moving at a snail's pace, kind of like there are yachts right now in the islands of Greece, right? It's just like very, very luxurious time, right? So by the way, Dave is not a yacht dude. He tends to be a pretty fast conviction kind of person as well, and knows how to move fast because he's been a founder before. But I want to call that out because stereotypes are always dangerous, but sometimes they exist for good reason too. In this case, when it comes to like, I kind of try to understand like what kind of family office they're, because they're not all the same. Dude, Dave, you've been pitched like a gazillion times. I want to hear, and there's a lot of GPs listening today. So what's in like an instant red flag that you see where you're just like, oh my God, no.
Yeah. I mean, so VC, well, a couple of things with family offices. A lot of people don't know. A lot of family members don't want to do risky stuff because not just losing the capital, but also ended up egg on your face and potentially creating rifts of relationships internally. So when family offices partner with external people that they're new to, you want to make it easy for them to champion you. And a lot of that starts with communication and transparency. But some of the red flags that I see right off the bat is trying to close and the sale. And to me, being transactional and short-term thinking at the start of a long-term partnership is not a good look, and it rubs people the wrong way, especially if you have the mentality that a lot of family offices have, or the questions in the back of their head: how much is the ask and when is it coming? How much is the ask and when is it coming? And yeah, and taking a different approach, I think it's important to think long term if you do want to actually engage with them, but you want to make sure their whys are aligned. I would not want to take a family office's capital if I was not aligned with them and truly wanted to interact with them long term. I treat it the same as the VC managers that we invest in. I want to be a partner. Like, I'm risking more than just capital. I work with my family. I need it to be easy for you to champion me. And if you're not communicating or misleading before we write the check, I can only imagine what you're going to do after the check. And yeah, that's how a lot of people think initially, where it's like, hey, is this going to be a good partner, or are they super transactional right off the bat? I'll say another thing too, another red flag is it's pretty obvious when people are gatekeeping, whether it's relationships, whether it's events, all sorts of stuff. But that, while that might seem like a good strategy off the bat, what it signals to family offices is you're not confident in your own skill set, and you're only as good as the gatekeeping you keep to distance other people from getting to the people that they want to get to. So that's also just a huge red flag to me, that they're not confident in their own skill set with what they're doing, or they don't have their own conviction, which is something that I like to do when I do venture investing.
This is such an important point. I hope that GPs here are taking careful notes of what Dave Soxie is saying, the transactional part of it. I mean, like, when I proposed to my wife, I didn't say, will you marry me? I said, do you want to grow old with me? Fun fact, she said yes. And it's a little bit like that with Dave or any family offices. It's like when they sign up for your fund, minimum 10-year relationship right there. Right. So like, if you don't respect, like, isn't okay, I can take a step back. Like this morning, I recorded like this YouTube series that we do called Uncapped Notes with my colleague Janelle. And she made a really important point, which is like, in business, a lot of people just forget that there's a human on the other side of this. Right. So like, you got to treat humans like humans. And it's so important that you don't rush certain things like that. So if it's like 30 minutes with Dave, it's like, yo, Dave, you in for like $2 million? Like, yes or no, let me know by end of the day. No way. Right. Like, who wants to work with someone like that? But let's talk about a different kind of red flag here. So you kind of shared a little bit about like the things you might be looking for that might save you the pain at the point of the pitch. But let's say that you decide to invest in Eric VC. We have a good conversation. Now we're actually working together. What's the best way for me to prevent you from ever wanting to support me ever again after you've invested?
Yeah, I mean, it's something what I said a little bit before. Make it easy to champion you, and doing that with communication, transparency. I mean, not only sharing the good news, but the bad news as well, because whether it's a family member or a hired gun for the family office, they have to go back to the investment committee and share the progress and what's happening. And it's their neck that's out on the line. And if they don't have a lot of meat to share, they're going to get eaten up pretty good by their investment committee, and it can be very, very challenging. So a big thing is making it easy to champion you. But I would say other stuff too is like, don't be afraid to do the work. Momentum investing is a real thing, and I learned that in the last couple of years, seeing how some VCs operated. But like, hey, if a family office is looking at a deal, like, offer to do independent analysis without meeting the team, and just give them your input. Like, that's why they are working with you, because you're a venture investor. And like, if you're not showcasing your skills or whatnot, or you're always just saying, I got this deal from so-and-so, we invested, like, they're going to lose confidence, because they have to go back and say, oh, well, they invested to their investment committee and say, well, we went in this one because there was a blue chip in this one. Well, that doesn't give them any future confidence on just supporting that individual by having their own conviction. But the other thing too, I would say, is like sharing data and reports. I think Hustle Fund does a phenomenal job of sharing trends and what's happening in the industry. I try to do that with my greater family office community as well. And then, I would say also, like, welcoming to events, whether it's your own events like Camp Hustle, or you're traveling to certain industry events. I mean, if they're in the city of the family office, or the family office is in that area, like, include them, or like, because if you're going to gatekeep them, they're not going to champion you, because you're making it really, really hard to champion you. So I think those are some of the things that I have seen just to date, and with my own experience as a family office.
One piggyback question to that: what's the ideal frequency of communication you want to see from your GPs?
Oh boy, ideal frequency. I think monthly is great. Quarterly at minimum, I would hope, because with how, I mean, you all know this as VC fund managers, it's like a couple months is an eternity in startup world. It's a quarter in the corporate world. So don't act like a corporate, act like a startup, because that's what most VC funds are. So it's tough when you come at the 11th 12th hour saying, this founder needs help, or we need to close and need one more LP, and it's like, yo, I haven't heard from you in like 3.5 4 months. Like, and so yeah, I think that's what I got for that question there.
Yeah, I mean, GPs who are listening to this advice, just think about when you're deploying to your own founders. We all have our share of some certain founders where you give them the money and you just never hear from them ever again. Like, even like during audit time, it's just like, yo, can you like tell us what's happening? It's irritating, right? So it's the same analog, right? Like, your LPs, I think, deserve that kind of respect as well, that you want to see from your own founders. I think monthly. So try to do that. All right. I got one more question for you, and then the queen herself, Kara, is going to join us, because I see Q&A coming in. So the question is about, when it comes to fundraising from the GP perspective, it's very easy to kind of isolate your LPs and family offices, especially, as like just sources of capital, and that's it. But what's the opportunity being missed? Is there a sort of a pattern of what family offices should be able to contribute, or it's reasonable to ask for them to contribute back in terms of the strategy of the fund, helping with the portfolio? Like, I don't want you to speak for everyone, but like, in your experiences, like, what's being under leveraged that the family office could offer back to a GP?
Yeah, so I mean, I think a lot of it is network and connections to true customers or strategic partners that can drive revenue. I mean, I've done that with a couple different startups where I leverage other family offices in those industries. I think that's a big one. I think another too is direct investing, not necessarily for the stage that you go in with the fund, but as they progress your pro rata and stuff to fill it out. A lot more of these family offices want to go direct. And you probably hear the annoying thing, hey, I'm not interested in the fund right now. I would love to see some of your direct deals. Well, my response to that, and what I tell a lot of family offices, is if you want to do direct deals, you got to be working with people that are doing venture full time. And I think it's smart to do the multi-prong approach where you support fund managers if you want to do directs. And and I think another thing people can easily do is, if you have a family office that's supporting you and you've made it easy for them to champion you, asking them about other family offices, not just for your fund, specifically around certain deals, around strategic help with customers or distribution partners or other stuff, because then they might just find interest in what you're doing and how you're doing it, and then be inquisitive and learn about the fund, instead of just saying, hey, push another fund, oh, add it to the deck of the 50 or 100 we're going to look through. So how do you stand out? Do the work, showcase your skills, and then highlight that, and allow people to champion it. And I think that's the best way. And I mean, I've had to do that with my own family office. It took me 2.5 years for them to think it was a good idea to pool our capital together. And that was with monthly communications that I had to them at the time. So yeah, it's the same thing with other family offices, though. You want to make it easy to champion them, and then showcase, why it makes sense to be involved.
I'm digging this. If you are late to the conversation and you didn't hear the introduction, we're speaking with Dave Soxie, founder of Soxie Family Fund, as well as Family VC. We have a little bit of time for open Q&A, and I really encourage you to put something into the Q&A section of the Zoom webinar. Dave right now is a little bit under the weather, therefore he's even more uninhibited when it comes to his responses.
I'm here.
Yeah.
I'll be transparent.
Yeah, and I'm in like a paracosmic dream right now with my lack of sleep, so I'm also uninhibited. Take advantage of this moment. Ask us questions. Kara, who wants to go first?
We have many questions. I want to start with one about something we talked about minutes ago, which is around how many family office managers are incredibly busy and might not get back to someone for days, weeks, months. Now, to Eric's point earlier about nailing your pitch, he talked about following up with investors like 19 times if necessary. So how do you balance Eric's advice with this very harsh reality of family office managers, time? How would you recommend that people follow up in a way that is respectful and helpful, given that your inboxes are just absolutely overwhelmed?
Yeah, so starting with that last portion of the question first, I think it's best to keep it to one channel. I mean, I know people, if they don't get an email, they'll want to hit you up on like LinkedIn, Twitter, WhatsApp, your cell, but it just gets it gets very overwhelming. And it doesn't I don't find fault in it either by any means, but it's harder to pin down and respond and see like the entire picture. So what do I mean by that? Like if you keep it in email and you provide your LP update or your friendly one that is not private info to prospective LPs, continuing to do that, and then I'm able to see it like on an email chain. And I know it sounds wild, but there's email chains where I didn't respond for a couple months, and then I actually went back in, and a couple of them I actually invested in. So having the patience is key, but like this is coming from someone that's not very patient myself. So being persistent without being a pain in the ass is definitely a delicate balance. So I would at least say try to spread out the emails 3 to 5 days at minimum, and not be like, hey, you didn't respond yesterday, I'm circling this to the top of your inbox again, because that does come off like there's some sort of urgency, or what do they need that I can provide that no one else can, type thing. So I think that's the last part of the question. What was the first part again? I'm sorry.
Oh, that's okay.
Did I get the first part of the question? No, I don't think I did.
Just sort of how to think about following up relentlessly, as Eric has recommended, and balancing that with the fact that you just might not get to it for a while. But I think you addressed it.
Yeah, some of it though too is when you're following up, have meat or substance in the email, not just like circling back here and like, yeah, I understand, and it just makes me feel more guilty that I'm not getting to you. But like, hey, just made this new investment, or hey, just got this new LP, or hey, just did this new strategy, or we have our upcoming close here. Just having some more actual substance in it versus just the resurfacing is also another key thing, and helps you stand out versus the other ones.
I got something to add to this one. So just to clarify, when I talk about being persistent, I'm not talking about let's put it this way. I'm talking about after you've actually had a chance to speak to the person and they've signaled that they have some interest to learn more, right? So like if it's like Kara and then like I'm trying to schedule with her and she doesn't respond and I'm like pinging her all the time, it's a little bit weird, right? Because like we haven't had a chance to establish that miniature social contract of like, oh, we kind of know each other. To me, this almost reminds me of when I was trying to ask my wife for that first date. And I was the irritating person that would text her all the time. And I have no idea why she didn't block me at that point. You'll have to interview her for the next Get More LPs webinar that we host someday in the future. But it's after that first meeting, right? So that's part one. And then part two is, I'm just going to go back to this other piece of advice that we were discussing earlier, which is, if you do the meeting and then LP Kara is like, yeah, okay, this is cool. You know, I'd love to learn a bit more. Ask for permission in the call to see whether she'd be down to join your LP newsletter. And that actually will start to feed passively the substance comment that Dave just made, which is like, cool, on a monthly basis, we're going to add you to like our investor list. And then you can actually see the deals that we're doing on a month-to-month basis, see our thought leadership, see if we're executing well. It's so chill because it doesn't require you to do any work, but you're actually adding a reminder and substance at the same time. And the last thing I'll just share is this, which is like, if you're going to do the persistence thing that I do, at least, and my persistence notes aren't very helpful. Like outside the newsletter, like I will like surface the email a lot. I'll always add a face saving ask, which is like totally cool, by the way. I'll end the email like, totally fine if it's not the right time or it's just not the right fit for any reason, just let me know. And I'll just stop pinging you about this one for this cycle. All good. Just give them the out.
I think another thing, yeah, I was just going to say another thing to add. So when you do get that first meeting with the prospective LP or family office, probing on like, hey, what does your process look like is really critical. And I know it's easy to say, and sometimes you don't get a lot of information from them. Hey, it'll take a couple weeks. Hey, 2 to 4 weeks. Then asking them about, hey, what information are you looking for type thing? What can I provide you? Whether you have references in a bench ready to go, existing LPs, existing family offices as LPs, that can be pretty important. And if they are very clear and articulate about their process, those are the ones that I would pursue quicker. There are some like me though that my process can be 2 to 4 weeks, but right now, due to the macro, due to about 80% of my time spending on platform support or supporting the 58 unique deals I've done so far, on top of some internal projects we have going at our family office, I'm atrocious right now. It's more like 2 to 4 months, but I haven't been doing a ton of new deals this year. But really, even following up and probing on that, like, hey, I've noticed we're at like a month here. Is there any other information I can help you with? What can I provide? But truly understanding the process, I think is really important. And then if they don't have a lot there, that typically means they don't have a process. So then you can probably put them in your long, your long sales cycle, like funnel, on however you do that. But that's a good way to delineate between some family offices that are serious and then some that might be playing Shark Tank or aren't ready to actually pull the trigger yet.
Playing Shark Tank. Okay, so then another question, unrelated, is now even a good time to be raising from family offices? You know, we're still in a little bit of an economic downturn, a couple of bank runs. Are family offices more likely to be putting their money in a less risky investment opportunity? Should we be holding off?
Yeah, I mean, it's not about less risky. Some of it is more about the illiquidness of especially early stage, where now you're also going to be competing against other asset classes that family offices will look at and say, well, there's a bunch of stuff in the public markets that are on discount. Maybe I'll just put some money in that for the next 24 months and then pull it out when I want to. So this is what I mean. I'm someone that's always that. No is just a not yet to me when I'm on certain journeys. And I would continue to pursue family offices, again, because of the trends that are happening. Yes, the macro's a challenging environment right now, and fundraising is brutal on both sides of the table, founders and VC fund managers. And there's some trends happening that the family offices and high net worths are waking up to, like the mega funds. The mega funds are starting to have a tough time fundraising their entire funds. So, and I think that has to do with I don't want to be illiquid for so long and look just for a 2 to 3x. So back to what I was saying before, make it easy to champion you. Get champions, LP champions on your bench that can be references. Showcase how you think through your memos or analysis. Bring them to events. Shove data and reports down their throat to understand this is why I'm doing what I'm doing, and I believe in what I'm doing, and it'd be great to have you a part of the ride. If not, just watch.
Okay, cool. You mentioned, bring them to an event. That brings up a question that somebody has, which is around this person actually hosts events for emerging fund managers to help them get off the ground. And one of the ways they do that, they try to connect emerging fund managers with offices. But as we've already talked about, it is like notoriously difficult to get in front of family offices. Like they hide a little bit, right? Like they don't want to get pitched like crazy. So what would you say to this person?
Around finding events to find family offices, essentially?
Around attracting family offices to events with emerging fund managers. Is there anything that would get you to an event like that? Or would you feel like, oh, I don't want to go to that because I'm just going to get pitched for free?
I think the more I think the more private, intimate settings are a lot better. So I'll give you an example. So I built my family VC community with over 100 family offices, going to different industry events like tech weeks, like different conferences. But instead of just trying to mingle at the conferences, I actually set up very intimate, informal breakfast, lunches, dinners, coffees, happy hours, more just to break bread and get to know people. And sometimes doing it in an educational manner on, hey, this is the asset class, or this is early stage investing versus late stage, but not actually having an ask there or having a formal pitch. And I know that's not easy to do, but like then you start the relationship with like, hey, you're adding value right off the bat, and now I'm curious or intrigued at like what you're doing. I mean, I've been having the same challenge that a lot of fund managers are, is attracting family offices, because that's my differentiation to venture. And I've just done that slowly through data, my own conviction, sharing my thoughts, and then trying to drag people along my learning journey. And there's some people that say, Dave, you're crazy, you're an idiot, go fly a kite. There's other people that like have been excited from day one and have been aboard. There's other people that have been quiet for 2 years and they're like, now I get what you're doing. And yeah, and it's a long sales cycle, but like ultimately the biggest thing is creating trust with family offices. And it's really, really hard, especially if you act transactional. And I know business is transactional, but leading with value, because a lot of you fund managers, if you've actually created a fund or even had a first close or a near first close, you're doing a lot. It's just like a startup. You're grinding hard, showcasing some of that skill and talent to them in a way that is not in a pitch environment, and more of just like, hey, let's break bread here. What are you like? It goes very far. Yes, it's a longer sales cycle, but like if you're seeking LPs for a decade, it's a good approach.
That's great. That's great advice. I'm going to take that advice too for our upcoming events, Eric. Dave, are you able to give us in your own kind of a cold email that would like definitely get your attention to take a call with somebody?
Boy, I don't know about that. I mean, there's all different formats. I think something that stands out though too is those that actually do research. And by research, I mean not just merely, hey, I looked on your website type thing, but also like, hey, I'm connected to so-and-so and I know you're connected to them and I actually talk to them or whatnot. And that can be a lot of work. And I know that. And I've done that with family offices, both for my startup as well as for my venture investing. Even though I wasn't asking them for money, it was still challenging. But having more like of a personal touch, if you are going to go for these bigger LPs and go whale hunting, you're going to need to do a little bit more prep work, in my opinion. You can't do the broad brush, but that's been my approach to date, where I don't like doing the shotgun approach. I do more of a sniper approach, and I try to do like some personal touch that relates to them, like right off the bat. And that is also what stands out to me. What doesn't really work is the false urgency that is created. And I know that it can be a useful game and important. And some of my dear friends in the VC world also articulate that. However, in the macro environment, when there's a lot of competing asset classes and other things, you just don't want to create urgency unless it's actually there type thing, because then it comes across like this deal or fund that was supposed to close a week ago, 3 months later, it's still open. What's wrong? And or they weren't very forthcoming and they misled. Well, why would I sign up for a decade with those people if they're misleading me and I haven't even wrote a check yet? I can only imagine how they're going to operate after the check. So yeah, those are the thoughts there.
That's really helpful. And I know we're just about at time, but I just want to do one more and then I will let you both go, hopefully take naps, which is around funds that are really mission driven, right? So maybe it's a fund that's, supports founders of color or supports specifically like climate tech, but they're doing it they're not in it for the money. They're really in it. I mean, they have to make money, but they're really in it mission. Is there a way that they can position themselves to make them their funds appealing to family offices is there something different they should be doing?
Yeah, I mean, this goes back to aligning with the incentives and making sure, like, because I know family offices here that will only invest in female founders, or will only invest in certain geos, or definitely won't invest in certain verticals, really want to invest in certain verticals. And just, it's not easy, but finding those families to do it through networking is critical. But yeah, not a lot of them are out there, and that's part of the reason why I'm trying to work on a project that could connect that stuff a lot more seamlessly. When it's like, who are the family offices that only invest in women type thing? Well, I only know a handful, but I only know that through building this community the last 7 years. If I had to go find others right now, I'm not sure how I'd do that other than going to the existing family offices that only invest in females and asking them, who else do you work with? So yeah, a lot of it is the chain game that I play on finding those. But I do think understanding the why and then aligning the incentives and the impact is really important, and it's easier said than done too. So I don't want to act like holier than thou some of this input or feedback, because I've also experienced the challenges reaching out to family office, heck, even convincing my own family office around the asset class.
This is awesome, right? I know that we're at time here, but this is a great session. I'm seeing so many responses on the chat. Sorry, Kara, if I spoke over you. I think there might be a little delay on my end. I just want to give a final shout out to my buddy here, Dave Soxie, family office manager. Check him out at familyvc.com. Check him out at soxiefamilyfund.com. Bring in the realness in terms of some advice for the GPs here on how to raise capital for family offices. Dave, I think we need to go take some naps right now, right? As Kara recommended. Thank you so much for canceling everything on your calendar except for this, just so you can show up for this community. It means the world to us, and it's so awesome working with you, dude.
Yeah, happy to help out. And I mean, this wasn't too bad to power through, so it's all good. I'm always happy to support. And yeah, the best way to reach me is through the websites right now, as the frequency on looking at the submissions is increasing significantly. And yeah, appreciate everyone's time. And as always, hustle fun. Proud of all the great work you guys are doing.
Appreciate you, brother. Thank you so much.
Thank you, Dave.
See you guys.
Peace. There she is. What's up?
Hi, all. All right. Well, it seems like it's been a great session, and we have one more amazing speaker, Mac Conwell. Mac, I know you're here. Are you here?
I am. I'm here.
All right. It's great to see you. And I just want to say, actually, Mac is an inspiration to me. You know, I think if there's anybody I can think of who has gone against, you know, all the odds, and we all go against, you know, crazy odds in being able to raise a fund or raise for a startup or whatnot. But Mac is, you know, the truest of all hustlers, very creative in his approach. So I'm excited. Thank you for joining.
Thank you for having me, Liz. It's an honor to hear that from you, somebody who I really respect and look up to. So thank you.
So I'm going to give a quick bio on you, but would love for you to actually elaborate on it. Mac is an engineer. He's a founder, and he's now a VC. Can you walk us a little bit through your own personal journey at these different stages to help paint a picture of, like how you got into VC?
Yeah, so started my career as a software engineer. I was a government contractor. Then a good buddy of mine decided to leave his good government job and go to San Francisco because some people gave him money to build apps, and didn't even know what that meant or what was going on, but thought like, hey, I'm a builder, I could do that too. So in 2009, 2010, me and two of my good friends decided to start a website. Didn't know what a starter was, didn't know what a VC was, didn't even know what networking was. We were just three engineers, right? Run that company for 4.5 years, 2 accelerators, a pivot, and eventually sell the IP to a division of a Fortune 100 company, and learned everything the hard way. As a founder who comes from a disadvantaged background, like I didn't know any of this. And so it's just like bumbling in the dark for the first couple of years just to figure out how to get started. I then went on to have another company that didn't work out, but it was a very different experience because for my first company, I didn't know how to get customers, and I didn't know how to get funding from investors, but I knew how to build. For my second company, we were never able to build a product, but I was really good at figuring out how to get customers and get funding, right? So like I learned something, but team construction is still really important. I then have a year where after you have a failed startup, you just kind of got to get your life back together and just like get yourself a job. I actually got a job at a marketing firm. I was there for a year, and then I had the chance to apply for a job working for the investment arm of the state of Maryland. I applied to take over the position of one of their key funds as a fund manager. They told me I wasn't qualified for that, but then they created a junior position to bring me on staff. So I literally got my job in venture as responding to a community-wide email that said, hey, apply. I don't know if I've ever met another VC who could say that, but that's how I got in. And so then I started working for the state doing early stage investing. And when I got started, and this is late 2016, they were struggling to invest very specifically in Black-led founders, which is very poignant considering the way the world is working these days. And so I decided to put together a program here at the state doing pre-seed investment in early stage Black founders here in Maryland. We then grew that to women and all minority groups, including immigrants. In 2020, or in FY 2020, I go before the governor and state legislators, and they made that an annual fund. They put that in the annual budget here in the state. So it's the first and only state-backed pre-seed fund for women and minorities in the country. And the whole time, this is where I'm cutting my teeth in venture, right? I'm learning how to source. I'm learning how to do due diligence. I'm learning what kind of companies I want to invest in and not invest in. I'm learning how to get creative in my deal sourcing, because I went from being able to find the best tech entrepreneurs in the state of Maryland to being able to find the best Black tech entrepreneurs in the state of Maryland. To get a decent deal for you gotta really look everywhere. And then in 2020, I decided to leave that job and start Rare and Breed Ventures in the midst of COVID and George Floyd, which were two things that buoyed that time and space for me. And so I was able to raise a $10 million fund, most of it off of Twitter. So I know we're going to have a lot to talk about that. So I'm not going to go too deep, but raised most of my fund off of Twitter, did it in public. And today I have now, fund one was 10 million. We've now deployed capital to 45 companies, and looking forward to the next phase of our firm. So that's the short version, I guess.
Yeah, I think that's incredible. And we're going to dig into some of these pieces. But I think before we do, one question that's always sort of top of mind that I think everyone should consider is like, why raise your own fund in the first place? You were at another fund having good impact. Did I drop?
I think it's on my side. So let me close out some stuff.
Why raise a fund in the first place? You were at another fund having great impact. You could have run SPVs. There are all kinds of options for you.
Yeah. And
you're good.
Okay, good. I was about to say Murphy's Law is like coming as true as possible. I didn't set out to raise a fund, right? And I think for some people, like they come in to this industry, you know, that's what they want to do. I didn't know that's what I wanted to do. I got eventually knowing that I really liked it and I loved it. I loved the work. But I wanted to make money. I figured I'd end up at like a big, you know, big firm. You know, I'd find my way to a Bessemer or A16Z and, you know, become one of their only, you know, minority partners and, you know, get all the accolades and make the money that way. But I was really inspired because when I was working for the state of Maryland, I was literally running a pre-seed fund for these disadvantaged founders. And yet I was still meeting founders I couldn't get funded. Very specifically, I watched this Black woman over a period of years not getting any support for her product, and then decided to become a surrogate mother to raise the capital to start funding her development. And I was just heartbroken because I couldn't think of a solution for her. Like, where could she have gone? Who could she have gotten the money from? And I couldn't like very quickly come up with the answer. And so I figured in order to change that, I'd have to be the answer. And so that inspires me to raise a fund. It is everything I said I would never do again. I said I would never be a founder again. I was never going to start something from scratch again. And being a fund manager is being a founder. You are starting a business.
100%.
I wasn't paying attention to that part in class.
Well, I think this is a good segue then. You know, you had never started a fund before you did this. And, you know, I guess, where does one start? Like, how did you, and you also didn't have too much of a Twitter presence back then.
No,
so how did you go from basically zero to raising the $10 million fund?
So the way the story goes for me, and again, like my story is very unique. There may be some nuggets for people to take, but please do not try to do this the way I did. I'm just telling you now, there's better ways to do this. And I'll tell you how I did it, and then I can give you some advice on some things I've seen other people do well. Is that fair?
Yeah.
So for me, I started off where I was actually originally doing SPVs to try and help some of these founders. And one of my advisors said, I don't want to invest in this SPV. I want to invest in every company you find. You keep talking about raising a fund. Here's $250. Take this money, make it a fund. And I was like, great. I don't know anything about raising a fund, but we'll try this. And so you go through your personal network to raise capital, just like we tell founders to do for angel rounds. And my personal network got me about 400K. And that was a far cry from the goal of 10 million. Then I recognized very quickly, I didn't know how to raise a fund and I didn't have a network of LPs. Like, I knew how to be an investor. I didn't know how to be a fund manager, right? These are two very separate jobs. Like these two very distinct jobs. I didn't recognize that. And so what had happened though was I had started tweeting post George Floyd just to get some things off of my head, and I had started being consistent. And all I was tweeting was helpful thing for founders. And keep in mind, in 2020, when I start this, I have like 2,100 followers. Like, I'm just like, it's barely anything. But I'm just tweeting helpful things. And so founders are starting to follow me. And I noticed other VCs like yourself started following me. And so when I saw folks like you follow me, I would automatically send them a DM, tell them a little bit about myself, and ask them if they're willing to put time on my calendar. Because I realized I needed to learn. And all these people were following me. I'm like, well, these are fund managers. Let me talk to them so I can learn. And so that started to fill up my calendar. And as I'm talking to people and learning, I'm not talking about money per se. I'm just talking about my fun and what I'm doing. I'm trying to get advice. I'm trying to learn. And then I meet you. And at the end of our first call, you asked me what my minimum was. And you said, yeah, I think I could do that. That was like a light bulb moment where it's like, oh, I didn't know fund managers could support other fund managers personally, not from their funds, but personally. And so that kind of emboldened me to keep that strategy going. And that's when I become an insane person, where over the first 90 days of me going through the strategy, I did 1,128 meetings. Remind you, it's COVID, everybody's locked in the house, so we're just all on Zoom. So I'm doing like 20 to 28 Zoom calls a day without any bathroom breaks because, like, yeah, I forgot to put breaks into my calls and through everything. But that helped me soft circle my first 3 million, right? And that was all while I was still tweeting. So my presence was getting more visible in tweeting. And then some combination of the people who see me on Twitter have now had a meeting with me. And so now that impression of me is growing in the industry, and that started building momentum, and momentum is powerful. And so, and then from there, then I started having the networks where people could make the introductions, and I started getting the dots connected, right? And so then it kind of snowballs from there. Don't know if that's the smartest way to go about it. And also it was very unintentional. Like people like, tell me your strategy. Like I fell into it. Like I could write a whole book and tell you this is the playbook and like this is the strategy. But if I'm gonna be honest about it, like it just accidentally happened. I fell into it. What I would tell people though, if when you're first starting, here are the easiest things you can do. And this is the stuff that like a lot of people do. It's like go to LinkedIn, search for terms like LP, family office, stuff like that. And whoever you see that's a second connection, get somebody who's a first connection to make an introduction, right? And just start there. That you'll get your first, 20 to 40 email intros that way. And that'll get some meetings going, right? The next thing you do is you go to somebody who has a PitchBook account and say, hey, can you run a query for me of people who are LPs, maybe in these specific areas who are investing in emerging managers? And then, you start going through then you go through those firms and you try to see who know somebody at those firms through your LinkedIn connections or whatever else you use. And then you also start doing some cold emails, start putting it out there. And while you're doing that, I would tell you it's helpful to also then start building a thought leadership brand. That doesn't necessarily mean Twitter, right? It could be LinkedIn, it could be Substack, it could be podcast, but start putting out there that you have a viewpoint on the world and a viewpoint on investing. Because LPs love that. They love to see the way you think and what motivates you and what kind of things you're investing in. That'll help you get meetings. Because then that'll help people have a touch point with you. Like they've never met you, but they've heard of you. And having heard of you is enough to get you into a meeting. So those are the kind of things I would tell people, just starting out. But for me, yes, it all literally started with Twitter.
So that last point, I really want to hone in on that because I think I 100% agree. I think most fund managers don't do that enough. But, I think let's dig into that a bit. It takes time to put out content and thoughts. And already as a fund manager, you're running around meeting with all these people. You're doing 1,000 meetings. We did 700 meetings. How do you balance all of that? And maybe the answer is you don't, and it's just brute force. But like, do you have any thoughts or tips on how do you find the time to put content out there and run the business?
I have lots of thoughts. I don't know about how many tips. And what I would say is balance in this industry when it comes to time is just hard. And that's balance for everything. Like I mentioned, being a fund manager and being an investor are two distinct and different jobs, right? Being a fund manager is you running a firm, you're running a company of people. You being investors, you being able to do the day-to-day job of sourcing deals and making investments and all that. Well, the thought leadership part kind of fits in the middle of both of those because they speak to your firm and you as a fund manager, and also you as an individual, right? Like if you're ever not at that firm, that thought leadership goes with you.
Yeah.
So you got to think about that part. And at no point, and like we've just talked about all this stuff, and we've only talked about work, right? We haven't talked about any of the other stuff, right? Like family and all that. Like that's a whole much longer discussion, and that's a much tougher topic.
Yeah.
But finding like this is for me. Like when I do my writing, which isn't as often, I usually do it like first thing in the morning on like a Saturday morning, or I like sit down at like 8 p.m. the night before I want to put it out. I get myself like an energy drink and I just bang it out. Like I'm just gonna sit here in front of this computer for like 3 to 5 hours, and I'm gonna just do it in this one setting. Because if I don't know where I'm gonna get it done. That's what works for me. But you just make the time, because like the things you don't want to do are very necessary.
Mm-hmm.
And if you want to do this, you have to do the necessary things. And so that means you got to make the sacrifices, which might mean you don't get as much sleep, or you don't get to tuck your kids in at night, or you can't go to this event. Like there are just things you have to just hunker down and do. And trust me, they suck. Like the stuff you have to do.
You blocked off time to do these tweets or tweet threads. Is that what I'm hearing?
That's what I do for my long form stuff.
Okay.
Twitter's different. So most of my tweets aren't threads. those are very like, I don't think about them. Like most of my tweets come out of like, I had a meeting with somebody, and in that meeting, I had a thought.
Yeah.
That thought I just tweet. I tweet it, I don't think about it, it goes. And that's the secret to the Twitter, is like, don't think about it. Every now and then though, and Elizabeth is really good at this. This is something Liz does really well, is I do a very in-depth thread, right? If I'm doing a thread, it's going to be a little more in-depth. And so for those, I'll block out an hour to an hour and a half of time for me to really sit down and think through it. Like these are threads, they're going to be like 12 to like 18 tweets long, where I'm really digging into a subject. That's when I'm really going to really dig into something. Like, yes, I literally block off time for those. Those aren't that often, but those are really important because again, all this stuff is evergreen content. So there are threads that I did 2 years ago that I still send founders to today when they have certain questions, right? You can almost build an FAQ off of my threads. And like at some point, I probably should do that, right?
Yeah.
That's a great idea. But like, yes, I do block off time for those specific ones, but for other ones, like the key for the other stuff is like, don't, like if you're doing Twitter, if you're doing tweets, they're supposed to be quick hits. They're not supposed to be like, I need to think this all out. It's me trying to give out a thought and give out a helpful hint. The longer threads, yeah, I'll block off like an hour of my time. I don't know how you do your long threads, right? Because you do like, your threads will be like 40 tweets deep. So like, I'm always wondering like, did she sit down? It's like, yo, after my Friday, I'm getting this done.
Well, I mean, partly why I ask is I'm always curious because, I mean, writing content takes time. So I hear you, like the random tweet of like, oh, I was talking with that founder and this thought came in, that's fine. But yeah, long form content takes a long time. And this is what people always ask me, like, how can I, you know, you mentioned being a thought leader is helpful, but how can I do it? So, I mean, do you have thoughts on trying channels? Like, I know that in your case, you kind of fell into Twitter, but I don't know if you were to go back and rewind the clock and think about it, would you try different channels? Like, I don't know, LinkedIn or blogging or whatever?
So when I do longer form pieces, I usually do them on Medium, and then they do really well on LinkedIn. Like LinkedIn is really great for long form. I do think though, I missed the mark on trying to get to more Gen Z entrepreneurs.
Are you going to start TikToking?
they're TikToking, a little bit of Instagram, and then being more active on Discord, right? Like those are channels you do for the founders, right? Well, maybe TikTok, you'll find some investors and LPs there now, but like at the time, like that's where founders. What I will tell you, Twitter and LinkedIn, that's where your investors, that's where your LPs are, that's where your other VCs are, right? Substacks, if you're going to do a blog or a Substack, everything you do is about consistency, right? So like once you start on the path of doing this, you got to keep it up. And I will tell you a superpower that, and no, it's hard when you're a broke VC and you don't have a whole lot of money to do this, but a VC superpower that not enough of us talk about is getting a PR rep. The amount of VCs I know who have a PR rep they work with to help build out their thought leadership, they don't do the work for you, but they help you collect your thoughts and figure out what's going to be your unique viewpoint you're going to put in the world. And then they help you disseminate that so that you get visibility. That can go a long way, especially when you're raising a fund.
Oh, I didn't know people do that. Good to know. All right. And so, you know, let's talk more in depth about how you actually got these meetings. I know that you basically just DM'd me directly, but what did you do with all of these Twitter followers of yours? You said you wrote them a DM and then you just asked them to hop on a call, or like, was there some back and forth? And why did people hop on a call with you? Like, how did you get all these calls?
The exact same way I got my call with you. I sent them a DM, and then the way the DM was formed, that was it's basically I wrote them a DM saying hi, told them a little bit about myself and what I was working on, and then asked if they would be willing to meet with me so I could learn from them. And then I put a link to my calendar, and people just filled it up. And now the key here though is, if you put investor or VC or anything like that in your headline on LinkedIn or Twitter or anything else, every founder in the world wants to talk to you, but then every other investor in the world wants to talk to you too. So I would say like 70 to 75% of the people I sent that DM to responded and put time on my calendar, because investors are always happy to meet other investors because we're all looking for deal flow. and I don't know where your deal flow comes from. And if you got some unique or different deal flow, I want to be your friend. Yes. So that we can see, so I can see the companies you see. And so it just started off me just saying, hey, I would love to meet. And people were like, okay. And I know for a fact, most people didn't know why they were meeting me other than we were just both investors. And probably the same way for me, where like, I didn't know who some of these people were while I was meeting them, but like, hey, I saw that they said they were a VC in their profile, so let's meet. And as I would go, just some portion of those meetings, as I would talk about my journey and what I was building, you get to a point where you start to, you know this, Liz, you pitch enough people, you find certain cadences in your pitch where this is where somebody's supposed to get interested. This is where somebody's supposed to laugh. This is where somebody's supposed to get a stern face. And so you can tell by people's facial expressions as you're talking, okay, I might be able to wiggle in a little bit of the conversation, take this further. Like, it looks like they're into what I'm talking about. And the other people's like, it looks like they could care less about anything I'm saying right now. This is going to be brutal. But you do enough of those pitches, you start to feel that out. And I got better at asking people, you know, as I was doing, like, hey, you know, would you be interested in being a part of the fund? Our minimum is what, XYZ. And some portion of those folks started saying yes. And it's like, I'm always expecting a no, but boy, does it feel good every time you get a yes, right? And then as you go, those yeses start to get more and more, and they start to get bigger.
So who were you pitching exactly? Like other GPs? And how do you make that ask? Like that's actually a question that many people have. Like, how do I actually ask for money?
So a lot of them were GPs, some of them were LPs, just whoever was willing to like put time on my calendar. And so I formulated this pitch where the way I introduced myself turned into my actual fund pitch, right? Where my introduction was basically some form of what I did earlier, was like a little bit about who I was and how I got into the industry, a little bit about, you know, the work and the type of fund I was building. And then I would finish it off telling the story of my North Star, this woman who, you know, made me want to start a fund. And by the end of that period of time, we would start to get into a back and forth. They would ask me more conversations. I would have a bunch of questions around fundraising. And in the beginning, it was all people's like, well, you know, tell me, you know, you said you're raising a fund. What's your minimum? You know, how much are you looking for? And it's like, well, I'm not here to pitch, you know, I'm just here to learn. They're like, okay, I get it. But I put time on your calendar. I know you're raising a fund, so tell me, right? And like, those were the best, was like, they were asking me. So it's like, it made it easier on me. That's how you were. So thank you. You made it very easy, Liz. But then as I went through the process, I got more and more confident, where I would get by the end of our meeting, I'd be like, hey, by the way, you know, we're still in the process of raising, you know, we're doing a close on this date. Our minimum is XYZ. Would love to know if you'd be interested in being a part. And people just say yes or no, right? And if they say no,
make the ask. You just make the ask.
You just make, because you got to get to the point where you can, like, you got to get to the point where you enjoy the process, because if not, you're going to hate every second of it. And you get to the point where you just make the ask, because here's the thing. You can't be scared to do what we ask founders to do. Yeah. Like, this is what we tell founders to do when they pitch us. Make the ask. Don't just give me the whole pitch and then be like, okay, so what do you want? Like, at no point did you tell me you needed money. You just share me about your company. It's great. Make the ask. Well, we got to do the same. And raising a fund is the most entrepreneurial thing a fund manager can do. Right? Because this is where you get to be in the founder seat. The only difference is you do it for a lot longer. Founders might raise for, 3 months. You're going to be raising for like 12 to 24 months, right? Yeah. So like, it feels different, but it's the same thing. So yeah, you just get to the point where you make the ask.
So, okay, let's put aside the folks who kind of prompted you and made that easier. But like if we just look at the folks where you had to go in, make the ask, did people say yes off of that?
Yeah. I had people say yes.
So if you had not made the ask, do you think they would have invested? Or do you think there just wouldn't have been like that moment where, and I realize that's speculation, but what, like, I want to dig into that, because I think it's important to make the ask.
It's very important, because I know for a fact there are people who didn't invest in my fund because I didn't ask them. And I know there are people that did invest in my fund because I asked them. And like, I have people who I made introductions to friends. They're like, yeah, so-and-so put money in my fund. I'm like, what do you mean? Like, I've known them forever. They're huge supporters. They're like, well, I just asked. I was like, I never asked. So I reached out to them like, hey, how come you never offered to put money in my fund? I'm like, well, you never asked. I didn't think you needed. Always ask.
Yeah.
Always ask.
I know. I mean, I realize I'm belaboring this point,
Yeah,
but I think
it's
it's an important point to draw out, because I think many people do not actually make the ask. They dance around it, but they don't make the ask.
Yeah, it's really important. And then I will also say, don't just ask for the money. Also ask for 2 to 3 introductions, or maybe even just one. Like, hey,
so how do you do that? How do you do that?
The exact same way. It's like, hey, really appreciate it. Thank you so much for your time. Hopefully we'll get to speak some more in the future. Hopefully we'll get to make a co-investment in the future. VCs love to say that. Like, that's the thing, right?
Yeah. Let's
it's
do
like,
a deal
yes. And then, by the way, is it possible that you might have 1 or 2 family offices and that you were connected with that does do some LP investing, that you'd be okay making an introduction?
Are
They
there
say yes or no.
Are there people in your fund who, or rather, are there people who said no to you but made an intro that said yes?
Yes.
Okay. So just because someone says no, it doesn't mean they're not going to be helpful.
So yes, that's 100%. And one of my anchor LPs in Fund 1 came from an introduction from Foundry Group, who said no. Foundry said no, but made an introduction to an LP that said yes and put $1 million in my Fund 1.
Oh wow!
And for a $10 million fund, that's huge.
Yeah, yeah. Oh, that is huge. Okay, and so then how, like, I just want to mechanic-wise. So you're ending this conversation. You make the ask. If someone says no, like, it can sometimes be a little awkward. How do you then go from that to asking for an intro or whatever? Like, how do you play it cool at that point?
I completely understand. Thank you for even listening to what I'm doing, for the consideration. But I would like to ask, is if possible, even though you're not interested, do you think there might be a few family offices, maybe one family office that that you're connected to, that might be interested in hearing what I'm working on, what I'm building? Mm-hmm. And they could say yes, and they could say no. If they say no, like, hey, appreciate your time, love to stay connected, be on the lookout for a deal or 2 coming from me. Mm-hmm. The key part of that is follow up, though. If you say, hey, hope to send you a deal or 2, send a deal or 2. Oh, and also, the last thing you should always ask, also, if there's somebody who does make LP investments, ask them if they're willing to get Accenture quarterly updates. The same way founders send VCs updates, we send LP updates. And the same way founders ask us if they can send us their updates, make sure you ask. Because somebody might say no, they might not want to make an introduction, but yeah, send me your quarterlies. Those are the folks that you stay in touch with that may be in Fund 2 or Fund 3. Like, some of the introductions and connections you make today aren't for this fund. They're for a future fund, for 2 reasons. 1, gives people a chance to learn and build with you. But 2, especially institutionals, a lot of the people who work at these institutional funds, they move around, and they move around a lot. And so your connection at such and such pension fund might now be at such and such family office. Yeah. So that's a relationship that can lead into good things.
100%. I'm going to pause you right there. I have a lot of questions on follow-up, but I know that other people have questions too. So if you have questions, throw it in the Q&A section. Or Kara, I don't know if there were questions. Unfortunately, I couldn't read the chat while I was chatting with Mac, but if there are other questions that have popped up, let's get to them now.
Yeah.
Okay. Hey, Kara.
Hi, Mac, this is amazing. Elizabeth, great questions. I love that you guys are breaking this down like step by step, by like teeny tiny incremental step. So Massimo wants to know what you include in your LP and prospects updates.
Yeah, so in my LP updates, it's a lot of information just on it's a lot of information really on like how the fund's performing, like how's the portfolio performing. That's really number 1. That's top of mind. The companies you've invested in, who are the new companies we've invested in, how are the companies we've already invested in, how are they performing, how have they done? Has there been any press on these companies? Is there any big breakthroughs, any big partnerships, any big news? And then I don't do this well, but I've seen other people do this, where they also put in, this is where they might put in some of the blogs that they do. Instead of putting them out to the broad world, they only put them out directly to their LP. LPs love that kind of stuff because they feel like they're getting added value from you. Right. This is an advantage they have for being an LP in your fund, that the information that you're sharing with them is the information that other people in the industry are getting. Right. So they feel like you're helping them get smarter. So adding long form things like that in there. And then that's also the thing you get to do for your marketing. You know, if you're getting ready for another fund, you might be like, hey, you know, looking to see, you know, what's next for the firm. Would love to talk to some people and set up some meetings, you know, let me know. Or if you're going to do an SPV, this is my great place. Like, hey, you know, we have these couple companies that are coming up that are going to be fundraising here in the near future. We're looking to do an SPV and maybe one or two of these. Would love to know if anybody be interested. Like, this is where you get to do your direct marketing to your LPs. This is where you get to show them how competent you are, how well the portfolio's doing. And this is where you get to start garnering support from them, right? So in the future, when you need something or things aren't going as well, you have goodwill built up as well.
That makes a ton of sense. Although in the beginning, when you're first getting started, there might not be very much information to share, right? And to your point earlier, you're so busy forming the fund and fundraising and supporting funders and trying to get deal flow that perhaps there isn't maybe a blog post to share. Did you ever have a month or a quarter where you knew you needed to send an update, but you just didn't have very much fodder for it?
I mean, yeah, but then you just basically, you take your template, you fill it up like, hey, you know, we haven't made new investments, but then you put in, here are the companies we're interested in, right? Here are the companies that we've been looking at this quarter. Here's one or two companies we might have passed on, and here's why. Here's some things we're starting to see in the market. And here's some things like, while we were looking at this one company, we learned some information that's made us really curious about this space. And so we're going to be spending more time looking at this industry for this reason, right? Like there's always information you can share, whether or not you just pull it out your butt. Hey, gotta do what you gotta do. But you know, those quarterly updates are really important. And then also those updates in between, right? Like there's a launch from one of the companies, a company just raised a round, a founder of yours needs some help or support. If you have companies that need help or support, you know your LPs, just like we say we're value add investors, some of your LPs want to be value add as well. So ask them. You'd be surprised how often LPs are like, why didn't you ask me? I could help with that.
I know a lot of LPs want to get more involved, and this is like their avenue in, so that makes a ton of sense. Okay, another question that I've seen so far is around offering the right to co-invest as a way to attract LPs. And in fact, today's edition of Small Bets was about that. But a question that I saw is around like the cons of that approach. So if you say, hey, do you want to invest? And the LP says no, you say, okay, well, maybe you want to co-invest alongside me and kind of just like see how I work. Is there a downside to that? As in, what's the point of investing in your fund if you're just going to give me the right to co-invest? How do you think about that?
So you want to be clear about the co-investments, right? So it's easier depending on what stage you are. Like me as a pre-seed investor, most of my LPs don't want to invest that early. That's why they're investing in me. But then they do want to know about their seed or series A or later rounds, right? And so you want to keep them informed for those future rounds. And so like, that's where it's the easiest. When the co-investment is, we want to invest in the same round as you, what you tell them is like, that's awesome. We will offer you that when we can. We can't guarantee access in every round, right? Because some rounds are competitive. There's not as much space, and you can't get yourself squeezed out either, right? But what you do is you let them know, like, hey, when there's opportunity, and you know, especially like if we're leading or something like that, I will make sure you always get access and open to the opportunity. But I can't guarantee anything because it still comes down to the founders, right? Like the founders at the end of the day can decide who they invest with. I will make sure to advocate and say that you should, and I will make sure that you get to see some of the deals we get to do, but you know, that's only on a case-by-case basis, right?
Yeah, fair enough. Makes a ton of sense. Okay, and then earlier in this conversation with Elizabeth, you mentioned that some fund managers have hired a PR person to help with their thought leadership and visibility. I don't know if you've had experience with this yourself, but somebody's asking, how do you find the best PR people to work with?
So I I didn't do this myself. I do all my own content, as you can tell from all the grammatical errors. You ask your tribe, right? So if you're in the space, you should have a network and community of other investors that you share information with, that you talk to. Ask them. You'll be surprised how many firms have worked with PR folks, or how many firms have had their founders work with PR folks that they can make introductions to, right? All the PR folks that I've met in this industry have come because some other GP has told me that they were working with them, or they worked with somebody, or they knew somebody, right? So it's really by the grapevine kind of a thing, but that's how a lot of things in this industry are. Like, there are a lot of things in this industry you're not just going to be able to go to Google and search. It's going to be coming from, text messages with one of your GP friends, or a WhatsApp group you have of a collection of a few of you that share information, or a Slack group. That's where the good stuff comes. Like, when I got big questions, I need help, I hit up Charles Hudson and I hit up Elizabeth. Like, those are two of the top people. And Elizabeth knows because she's gotten those, right? And those go both ways. And so, like, you find the people that you can talk to, but that's really where you get the best recommendations, is from the people around you.
I promise you, we didn't pay Mac to hype me up. I feel like this is an ad for me.
I will say this though, as a fund manager, when you're out raising, since we're talking about fundraising, if you've been investing for a while, you get to the point where you see so many companies that look and feel just like another company you've seen before. It's like the fifth company I've seen that does the exact same thing. That's how LPs feel about fund managers.
Yeah.
When VCs put our pitch decks together and we talk about our thesis and our strategy and all that, if you had 100 VC pitch decks together, you probably come up with like 6 themes. Right?
Well, they're even less differentiated, right? Because at the end of the day, they all deploy money into startups, and they're all, looking for a return, right? Like, at the end of the day, that is what everybody is doing. There's no product UX or anything that's different. So I think it's harder to differentiate as a firm.
And I say that because I mentioned Charles and Elizabeth. Those are the 2 funds that Rare Breed gets compared to the most. We invest very similarly, right? And so then I have to spend 5 to 10 minutes in a meeting explaining what I do that's different. And, like, fundamentally, what we do isn't different, which is why we all have co-investments together.
Right.
But then that's when you have to figure out, for you as a fund manager, or you as a firm, what makes you unique. This is where a lot of firms struggle, is that it's like, okay, what's your differentiator? B2B SaaS, nobody cares about that. AI expertise, nobody cares about that. Like, okay, there's 50 other ones. What makes you different from those 50? And you got to get really clear on that.
So do you
that
have
is one of the hardest things.
Yeah, do you have any advice on that? Because I would say I actually don't have a great answer. Like, we kind of muddle through it, and we usually, if any of you were here for Eric's talk at the very beginning, he talked a lot about Legos and pathos, and it very much is about, like, oh, we love Eric and his storytelling, and then now all of a sudden we're not thinking about differentiation anymore. Like, that's our strategy, I guess. But any tips on how do you get past that?
Well, first of all, I come in the room looking like this, so I got a leg up on differentiation up front, and then it really comes down to the type of deals, right? So Rare Breed is a generalist fund. We invest in all kinds of stuff, and so then I can show the breadth of the type of companies. And so, yes, there will be overlap with a firm like Hustle Funds or like Precursors, but there's a ton that's not, right? And so it's like, okay, these are the unique things that I do. These are the unique companies. Like, these are the companies. And then also point to the companies where, like, I was literally the first check. Like, even if Precursor or Hustle Fund got into this company as well, I was there first. And so that means I probably helped facilitate that, right?
Yeah.
And so that's the value. Now, I'm pretty sure that Elizabeth and Charles both have companies in their portfolio they can say the exact same thing about, right? But then again, that also shows how we work as an ecosystem. That also shows that how, if I am the first check, I do have firms I can go to and partner with to help a company get funded, right? It's like all those things work together, but it's not an easy question to answer. And that's why so many people need to spend more time on it. This is where fund managers raising funds don't spend enough time and need to spend more time. I just need to get that point out, sorry.
No, I think it's so important. I mean, thank you for all of your hyping. I have gotten a lot more fund managers sending me decks, and it's become very clear to me, like, even to this point of, if I want to help people and introduce them to LPs, gosh, I have these 5 decks sitting in my inbox. They all sound very similar and I don't know what to do. And so this is actually a really important point. I think, how do you kind of tweak that? Because obviously everyone thinks their own firm is like a special snowflake.
Yeah, that was one of those things that caught me off guard, honestly. When people started saying like how similar all these firms were, and like, they're nothing alike. No, the people who run the firms are nothing alike.
Right.
The actual firms, when you put the information side by side,
Yeah.
it's almost scary how much alike they are when you distill it. And so like for LPs, they struggle with that. And so like, that is just something people need to spend more and more time on, because especially if you don't have a lot of track record, like you can always, like if you have track record, you can point to like, I've been investing for X amount of years and here's my track record and here's my DVPI, here's my DPI and my cash from cash and I do good stuff. Okay, great. If you don't have that, and again, like to have real track record, you probably need like 8 years worth of investing.
Oh yeah, maybe
you need
more.
exits. You need exits, and that's a long time. So like, yeah, figuring out like your thesis, like people talk about all this time they spend on their thesis, all these theses sound the same. They all, like they come down to it, they're all like around the same thing. We're so differentiated with it. I'm like, no, we all sound the same. So you got to find the other pieces that make you different.
Yeah. Do you think it's more about like hyping your own story up then? Like, because to your point, all the founders, all these firms are quite different. Everybody has a different purview. Do you think that's what it's about?
It depends on the firm, right? Because as much as we're talking about building a brand, the juxtaposition is, look at a firm like Thrive Capital. Like a part of their lore is the mystique of them. People don't know who they are. They don't know where they are. They don't put out any content, but they're on the cap table of a lot of really good companies. And that's how they got noticed, just doing good deals. And they explicitly said, like, we don't have a large track record. Nobody knows who we are. We're just going to come in, find great companies to do good deals.
Mm-hmm.
And now it's become a point where it's a part of who they are, the fact that there's just like a lore, they don't put out any content, that nobody knows who they are. And it's built the mystique. And that mystique has helped them with deals, right? So there's more than one way to do this. You just got to figure out the way that's best for you. So I don't want you to think that the only way to do this, you have to be boisterous. It just so happened like that's the way it worked for me. And as you can see from as much as I talk, it fits my personality. Like I'm the kind of person who's born for the stage, like, hey, shiny lights on me. I will say, the moment you do this, like raising in public, you do open yourself up to having a target on your back. You do open yourself up to like,
what do you mean?
If you ever have a slight stumble, everybody's going to know it. If you make a mistake, everybody's going to know it and comment on it, right? Like, there's give and take to being as public and open about things as I am, right? And that's okay. Like I'm good with that trade-off. It doesn't work for everybody, right?
Mm-hmm.
Like my wife has genuinely asked me, she's like, some of these conferences you go to, have you thought about having security? I'm like, no, what I need that. She's like, I don't know, if you got a founder who's mad enough at you, like a lot of people just randomly come up to you and stop you all the time.
Yeah.
I never considered that, but like, she's got a point. Right. So again, whatever you do, don't do it because you're following a playbook. Do it because it makes sense and it's authentic. Because like people can tell when you're not being authentic. That's another thing. Like when you're not being yourself or you're trying to be something else, like people can tell. And you'll be like, why is it so hard for me to raise? Like, yeah, I know it's supposed to be hard, but it feels like it's so much harder for you. I'm doing all the right things. You're doing all the things that somebody else did. You got to figure out what's right for you.
Mm-hmm.
And that's a hard thing.
And I think, I would just sort of also throw in here, like, don't be afraid to change your story. And I don't mean obviously change your fund or anything, but your pitch story will go through iterations. We went through 20 iterations based on what people said. And I think, sure, you're always going to get like somebody's opinion and maybe there isn't consistency there. But if you hear the same piece of feedback or comment like a few times, then it's time to like address that. And one piece of feedback amongst many that we received in the beginning of our fund one was, your story is not very differentiated. And so we had to like spend some cycles iterating on this story. And, you know, honestly, it is hard, but I think just being aware is the first step.
Yeah, I agree. But I want to ask you one thing about being public with your content. And this is something I do, but it's something I noticed you've done. So you've done a few posts about stress and how it's negatively affected you. Why was that important for you to do? Do you think that had any bearing or any help or hurting when it comes to LPs? By showing a vulnerability in a very public manner.
Yeah, it's a great question. I think I'm at the point in my life where, yes, I think putting things like that could negatively affect our fundraise. Sorry, Eric, I make your life harder. But no, I think it could make our raise harder in some ways. You know, there are definitely a lot of people out there who want, you know, this perfect manager we're backing, whether it's a founder or a fund manager. And we don't, you know, we want everything to be all buttoned up. And if they're not, like, you know, we're not going to back them. But I think at the same time, like, everybody is a real person. And I want everybody to know, including our own LPs, like, what is it that you're getting here? Like, this is who I am. Stress is part of the job. And I fully recognize that, and that, you know, I'm doing it. But I think it is also important for everyone to realize, like, you know, hey, these are some of the things that I've gone through, and here are ways that you can think about it if you're going through it as well. And I think it helps us with deal flow to be real people. And I think it helps us even with our LPs who are, you know, realizing that they're backing real people as well.
Yeah.
I don't try to hide anything or be like somebody I'm not.
I agree. I am the same way, but I will also, I'd be remiss if I didn't say that I didn't recently have an institutional LP tell me that he felt that my Twitter wasn't helpful because it wasn't serious enough.
Oh, really? Oh, gosh.
Which, again, there are a bunch of LPs who have different thoughts for different reasons, but understand when you get in this game, there are some parameters. And if you want to, you know, break rules or be different, you got to be comfortable knowing that those kinds of things are going to come up. And like, when him saying that didn't surprise me whatsoever, but it also just made me realize, like, he has no clue what I do day to day or how my job works.
You know what, Mac? I think it's kind of better that you find that out now rather than hopping on this relationship with somebody and then, you know, getting into issues with them in a few years. Like, I think the more everybody knows exactly what they're getting into with, you know, with different people or whatever, I think it's better in the long run. At least that's how I think about it. But I mean, to this point, like, I think, you know, this is probably a good place to end. There's going to be polarization. People don't like you. They don't like your strategy. They don't like your Twitter, whatever it is, like, people don't like. That's fine. There are lots of people who do like all those things. And I think not having personality, I think actually is less helpful in fundraising than having personality, because then people can kind of bifurcate better and get really excited about somebody or get really not. And, you know, that's fine. That's life.
There's power in being polarizing because you know where you stand with everybody. They either love you or they hate you. Makes it real clear. When you're in the middle, you don't know where you stand with anybody. So, and to that point, like, yes, you're going to get no's. You're going to have people challenge your strategy, tell you need to do things different. Be sound and be secure in what you're out there doing. Listen, learn, but you don't have to take on everything everybody says. And just know, like, there is enough money out there for you to find the right LPs. How long you want to go through the process to make that happen, that's a different day. But they are there.
Yeah, 100%. Well, actually, I think on that note, that's probably a good one to end with. Thank you so much. Oh, wait, actually, no, one more to end with you. Do you have any allocation available in your new fund if people are interested in learning about Rare Breed 2?
Absolutely. We are currently in the process of raising a $40 million fund too. We do have plenty of allocation, so anybody who's interested, feel free to reach out to me. My email is mac@rarebreed.vc. Really simple, make it easy for you. And Kara, just put it in the chat for everybody. We are doing our first annual meeting next Friday here in Baltimore. I'm actually doing it in the form of a cookout. So if anybody wants to come hang out at a park in Baltimore City with 200 other plus VCs, LPs, and founders, find the link and come on down.
I'm
Oh,
bummed
Mac,
this-
we already know about the cookout because Elizabeth and I are really proud LPs. And it has been a blast also having a little bit of skin in the game to support you on this journey. This has been a great conversation, dude. Thank you so much for this.
Yeah.
And you too,
Thank you,
Elizabeth.
Mac.
Thank you. Thank you for being supporters. Thank you for being LPs, and thank you for being such great friends. Like, no, they did not pay me to say all this, but these are two of the most helpful people in this industry, and I love them both. So thank you for having me.
Thanks,
Thanks,
Mac.
sir.
Well, that was a fun 3.5 hours. If you are still here, congratulations. You have made it and you are now ready to raise $100 million. But if you are not here, we are sharing out this recording in its fullest to the full list. I understand people are in different time zones and have meetings and other commitments and stuff. So look forward to that email from us coming soon.
Yeah. And again, I think, Elizabeth, I speak for both of us, for Kara, everyone here. A huge thank you to our amazing guests today, Sophia Amoruso, Dave Soxie, Matt Conwell. I mean, amazing speakers, like so inspired the entire time. And their talks were amazing. And I think that you're going to inspire another generation. I'm talking to you, your group, everyone here that came today of new emerging managers who are going to go forth. So thank you again for coming out.
And Kara, actually, if you're there, could you come back on stage? Thank you so much for pulling all of this together. This is really the brainchild of Kara, who is our head of marketing at Hustle Fund. It was awesome. Thank you.
My pleasure. Thank you both so much for thank you both so much for hosting us, for sharing all your wisdom, for leading such great conversations. We do these events really just to educate people and hopefully make this process a little bit less painful. If you have questions on anything we talked today, hit us up on Twitter. Our answers are insane, as we have discussed. That's probably the best chance.
Yeah,
And come to Camp Hustle Asia.
Yeah, this was such a good event. I almost feel like I don't want it to end. And it'd be so cool, Elizabeth, if this party could keep going in Bali.
It does not have to end, Eric. We are continuing this in Bali. And for those of you who want to come to our startup investor gathering in Bali in September 18th and 19th, you should join us. It will be a great group of GPs, LPs, family offices, angel investors. And I think you'll get to learn more about topics like this. We'll talk trends. You'll get to mingle and network. We've had emerging fund managers come to our Camp Hustles before and raise money for their funds. You'll get to get into great deals. It'll be a blast. So make sure to check out camphustleasia.com.
Awesome. And of course, final thank you so much to you, our audience, for joining us today. I hope you learned something, took some actionable advice from some of the speakers that you heard from, and that you can kick some serious butt in your fundraising too. Thank you all so much for being here, and we're excited to see y'all again in a future event, hopefully Camp Hustle Asia.
Thank you all.